Dusty Tube, right? Old Dusty Tube. A little stock, little rumble. It's trying to solidify itself. It's going to take a little time to get going, but the stock bounced a little bit, and I think it got up there like 16, somewhere around there. Took a little bit of money off the table I had in it, of course. It pulled back and it bounced again. So okay, here we go. So yeah, that's going to be interesting. The further that scenario plays out one with the other, they are raising money, of course, from what we know, meaning the Trump, Truth Social, whatever it's called, by way of DWAC, right? DWAC. They're raising money to be able to distribute it across the platforms like Rumble, of course. I think Fun going to get in on that too, because at some point they're going to try to maybe NFT some of that stuff. Who knows? But it's all in the pipeline, right? With this Rumble, platform, right? This new take on, we're going to take it to the man, energy over there. Because right now it's a whole lot of people from Parler and all the, all that kind of stuff over there. There's some other people from, all walks over there too, but yeah, you're going to have to sift through it. Right. But again, you can go over there and be yourself. Unlike, YouTube will kind of hit you across the head, censor you for any little small thing, threaten your channel, which we saw, a lot last year, and especially this year more so than last year. YouTube has been on a campaign to really, really censor a lot of people. I mean, a lot of stuff is mild too, so it's crazy out here. All right, so what's going on, everybody? Peace, power, and profit again. Happy to have you here. Again, I got, a few things that we want to discuss today. We're going to go into depth a little bit, in terms of some basics, right? Going back to the basics and some of this stuff in technical analysis. And then we're going to do a small synopsis of what they call a year, end of year analysis with the Fed tapering, right? What that entails in terms of going into next year, right? And also, we're going to do what we call a performance report, right? So going into the end of the year, I'm going to get with you all, of course, you guys will still, adamant in your training. We're going to do some one-on-ones, right? We're going to do a year in review, right? And again, we want to assess that dynamic aspect of what we've been able to, retain, false retention, and what we want to focus on going into the next year. It's kind of like, we're doing a little grading scenario, right? Right. And so, I think that's going to be great. We can kind of sit, focus on one another, of course, and pick each other's brains in terms of, where we are, where we want to be, and what we're going to focus towards, especially going into the next year. Right. So look forward to that. Of course, I hit you guys up. Y'all let me know individually some dates and times. It'll be like, 30 minutes to an hour, just try to get through everybody before the end of the year. Right. So just keep that in mind. So if you find a way to block off some time, I know you guys are busy like myself. We're going to get that done as well, where we do a one-on-one with everybody. And again, like a little review, year in review scenario. All right. So what's going on? We got the family on the YouTube popping in. Again, we got Thursday night training session for the mentor scenarios. You guys are happy to follow along. We're happy to have y'all here as always. You guys are, again, family in every aspect of what we're trying to do. Again, even though this is more directed towards the mentorship aspect, but we archive it through YouTube for that reason. So you guys can still kind of, follow along from that perspective if you're able to. So shout out to you all as well over there. All right. So I'm pretty sure you guys are, like, for the most part, been, keeping your ear to the streets, whether you actively engage in the markets day to day, if you're just listening in or watching it every now and then, you got an alert that go off every now and then, and across different asset class, of course, Forex, crypto options, the whole shebang. These are some very, volatile times for what I would say going into the end of the year. Under the circumstance, right? Because this year is totally different than the typical Santa rally setup, right? We're not, playing the market by the norm at this point, right? Because it's all this, this COVID stuff is still somewhat surrounding the markets, even though they're trying to beat that dragon back in the, in the bag, whatever. But more so the inflation, right? The inflation genie is out the bottle. We're teetering on the edge of stagflation. Again, not enough production, wage stagnation, right, and higher cost of goods and services, right? Some of the, kind of paraphrase version of stagflation. And regardless of the fact that we may have some good, better than expected unemployment numbers, which that's what some of the data that came out today. We had better than expected, earnings, employment, right? Less jobless claims. Let me say it for what it really is, right? Jobless claims, less people's filing for unemployment, right? Than the usual, right? We came under about maybe 40,000 people, right? That they had expected. Nonetheless, we kind of figured that would be the scenario that would start, to subside, obviously. End of year, people kind of taking, again, seasonal jobs as well. Of course, people just going back to work, period. And what really sparked it too, which we kind of was already waiting to see how this is going to unfold, was this, this whole OSHA, pushback, right? The whole idea of the vaccine mandate, right? So I'm pretty sure y'all been watching that. Supreme Court, the federal courts, I should say, struck down Joe Biden's vaccine mandate for private businesses as of today, or yesterday or today, and they already kind of hit it, put it on the books, I should say, for the OSHA scenario side of that, right? So, yeah, I mean, I think it was somewhat planned, if you ask me, because you put it out there and see what sticks up until the point you have to deal with the legality of it. And I'm pretty sure these people smart enough to realize that they was going to be taken to court about this. But at that point, people are already threatening that they're going to lose their job, so they went ahead and got the jab. See how that worked? It's like they play a dirty game, but this is how they affect your livelihood, right? Well, again, whether you for or you're against the jab, it's not about that. It's about the idea of people's livelihood is being, given an ultimatum, right? Either get this jab or you can't go to work. And so employers are scared. They nervous. They don't know what to do. They know it's unconstitutional by some of the most mundane perspectives. But again, they feel like they're just trying to, fall in line with what the government saying, right? They, get kickbacks here and there, and they don't want to, they don't want to be on the bad side of the White House, so to speak, in their mind, possible. Who knows? Anyway, but those were two monumental, appeals that were won on the side of those who are again having issues with, this whole vaccine mandate, right? This whole, hey, either get the jab or you can't, provide for your family. All right. So we're going to talk about a few things. Of course, we're going to, do like we always do, go into depth in terms of the, the lesson, obviously, if you want to, call it that, whatever. We're just going to, go at it like we always do, right? We do have a descriptive scenario where we want to talk about, again, technical analysis in detail a little bit, because a lot of what we're witnessing with the volatility is people also somewhat getting ahead of themselves, and they're forgetting some of the basic premise training when it comes to, having a sound, technical analysis perspective, basically, going to the chart, charting this stuff out, right? Getting used to those things. Even if you don't trade the market on a daily basis, it's okay to still brush up on your skills, right? Understanding some of the names of the candles, if that's, maybe a little bit rusty for you, get back in the habit of understanding some of the values of some of these candles, what they entail, patterns themselves, of course, in that regard, when we're dealing with, moments where the market is starting to expand now, which it is because of the volatility, right? Some of these patterns are still, they're going to definitely be king. Why? Because they're going to open up and give you a more lucid picture of what may be unfolding, right? Short-term or long-term, those patterns are king, right? As we like to say, the market ain't number one big trend and one big pattern anyway, right? But of course, right? So on a smaller scale, smaller time frames, right, leading into bigger time frames, you'll be able to, plot those a little better, right? Just case in point, looking at my screen right now, of course, we have the S&P 500 open right now on screen share. And if you looked at this just from this naked eye perspective, this is pretty much on a day worth of trading, 5-minute charts, whatever, 5-minute candles. And you see how the market obviously, kind of trended, was in a sideways perspective, for the most part. Just on the back end of the day, I don't have the whole screen. Let me see. I guess I should open the whole thing up. Right, be fair about it, right? All right, but let's see here. All right, let's do it like that. All right, so let's go back to today only, as much as possible there. All right, so you can kind of see just from today's price action aspect alone, right, coming into from this morning pre-market course into, obviously when the market opens up around about 9:30 here, where the market kind of, the typically does, right? Get that morning breath of people coming in that was, had limit orders already set, right? They didn't take them off. So instantly those, orders get filled, or if they even had market orders, right? They get filled first, right? And then all the people starting to look at everything, start to assess whether they want to sell their calls from the previous day or sell their puts from the previous day. That starts to kind of cause more volatility. And that's why they always say the first 30 minutes of the market is the most volatile time of the market. That's rush hour traffic, right? Even though it can extend beyond 10 o'clock, from 9:30 to 10 o'clock. But that first 30 minutes is like everything, right? And a lot of people make most of their gains that first 30 minutes and they're done for the day, right? I mean, think about that, guys. If you just only work 30 minutes a day and you have the rest of the day yourself, how awesome would that be? Right? Of course, we all endeavor to have such a scenario, right? And some of us are able to, right? But a lot of us love this in a lot of ways too. If we're not consumed with other things in life in terms of a job or school or parenting or entrepreneur endeavors, whatever, you're trying to find time to fit this into your repertoire as well, right? As we like to say, repetition becomes repertoire, right? All the things that you do on a daily basis, you start to get used to having that regimen, in your mindset, right? So market, participation is just another extension of us keeping up with the money, right? Following the money, right? As we like to say, follow the money, right? Because the world's wealth is stored obviously in assets. Unfortunately, there's no other, as we say, Tina, right? There's no other alternative that we've seen yet to rival that what the market produces. Actually, I posted some data today concerning just how wealthy the top 1% obviously has grown since COVID, right? They had a good chunk of asset ownership before, COVID hit, but even more so afterwards, they really increased a lot of their asset holding because they were up against a scenario where there was like, there's nothing else out there, that can rival what the market was offering because it was just free fall, right? Fed pumping money, everybody feeling liberal about the markets, and the market just went straight through the moon, right? Through the moon, right? So they gained exorbitant a lot more asset ownership under, the COVID chaos. And a lot of people from Main Street who were late to the party, who still kind of sat on the sideline to watch you guys get it in, right? A lot of them was watching y'all perform, and they was watching, right? They was like, let me, just in case, I need, get some information. I'm gonna hit this person up. But they could have participated too, right? But how this stuff goes. Everybody a little bit, a little timid until they feel like their ticket is punched and they ready to get in the game, right? But we welcome them at any aspect. But nonetheless, that's what we're dealing with. So typically, the 1% own around about 90% of all the assets. That's crazy, right? So, and the other 10% that's left is basically Main Street, right? Those who like you guys, whatever, right? You aliens who dare trade the markets, while everybody else looks at this stuff like, man, I ain't, that stuff there crazy, man. I can't do all that. Well, no, you have to realize this is how you grow and establish a pipeline to be able to, procure wealth, right? Or something to that effect, right? You building, financial bridges by using these financial vehicles, right? That's the term I use. These stocks, I call them financial vehicles, right? Getting you from A to B to C to D, whatever, right? They're just another, another use case where you can put your money to work for you, essentially, right? Without you having to kind of sit there and elbow it yourself, and you have to deal with people who may provide human error from messing up your game plan, whatever. So in itself, when you look around all the things that you may have, your hand in the fire in terms of growing, your personal wealth, that in itself, beyond a fundamental analysis in terms of the value and the cost of all that, there's a technical analysis that goes along with that as well, right? Finding the time, understanding, what are the things that need more attention than other things, right? Again, rearranging your schedule throughout the day, right? Prioritizing certain things over other things. That's a technical analysis, right? So we know technical analysis based upon charting and markets, but there's also a technical analysis that you have to perform in your life day to day, right? Sometimes we overlook that because we too busy, being king and queen. Like that's just part of, that's the minutia, just being me. But yeah, if you are more proficient in what you do, based upon the fact you're able to organize better, well, guess what? You have better, potentially better outcome, right? I would agree. right? So again, yeah, personal, accountability and organizing and proficiency is a part of you being on top of your game, period. So that's technical analysis, right? So back to the basics with that charting and also your personal, accountability. Because again, if you're trying to put yourself in a position to be more financially literate, in essence, to where you can use these instruments, not just again regular stock, we're talking all asset classes to your advantage, then yeah, you're gonna have to pencil in that time in your mental that, okay, I got 20 minutes to spare here. Let me go study about this, or let me rearrange, some stuff that they may be promising for some investment value, right? It could be real estate. It could be, again, a myriad of things, entrepreneur endeavors. So all of it is, is fair game, right? All of it is fair game. So this is, no typical respect of person, even though we're going to talk about, charting and stocks, investment, stuff like that. But I want you guys to realize the importance of it when it comes to your own personal accountability, right? Because you're going to encounter the questions, from all walks, right? Especially when you got some information to share with others and they may be interested, right? They're going to basically challenge you in a way where you're going to kind of do all the work and they just want the end result, right? Like I said, give me the tickers, that kind of reality. Y'all been there, right? Somebody, hey man, just give me a start to trade, bro. I don't need all the other stuff. Well, of course you do, right? Because you can't get from A to B without knowing, how it all began, right? What's the importance? What's the rules of engagement, as we like to say, right? So that's why we go hard about, hey, knowledge brings power, power equals profit. You cannot skip the knowledge to try to go straight to the profit. It don't work that way, right? Because again, left to your own devices, you're going to fail because you fail to plan, right? These are old school term, cliches and stuff. Y'all ain't new to this, but you have to realize that's how this stuff is set up, right? That's how life is set up, right? You got to prepare, right? Practice, Allen Iverson style practice. Yes, we're talking about practice, right? So preparation, right? Preventive maintenance, checks and balances, right? Well, my military family, yeah, I know what that's like, right? That's how your market analysis needs to be set up in the same perspective, right? You have to go through the preventive maintenance checks and services, right? Because that will save you from a pound of flesh later, right? By putting out that preventive maintenance. So another, an extension of that is knowing, again, the battleground that you're charting, right? The field of play that you're doing in terms of an entrepreneur endeavor or whatever, right? So a lot of this kind of sound like self-help stuff, right? And some promo stuff for, get your mind right. But it's all synonymous, because a lot of us, again, we will move off that square of, our basic analytics, and we'll start trying to say, I got this already. I'm good. Let me bypass these steps and go straight to, point Z. You skipped over all the alphabets and went straight to Z. Well, if you have any hangups at Z, well, it's because basically at some point you might have skipped over some stuff that was important that might have led up to that, right? It's odd, right, when you think about it, right? Because we all like to say we're professionals in our own right when it comes to what we feel like we know. But I will say this, especially when it comes to investing and trading, no matter how good of a trader you are, or better, even how good of an investor you are, you never, ever, ever, ever relinquish your basics. Why? Because the market will make you out to be a liar very quickly. Why? Because this is a performance-based industry. This is a performance-based industry. As the old saying goes, if you don't move your feet, you don't eat. That's the markets. If I'm lying, I'm flying, right? That's how this stuff works, right? You have to perform. And like I said before, if the world was designed to be a performance-based industry model across the board, as opposed to people riding pay clocks, a lot of people would be out of a job. Simple as that, right? So we understand that, again, what you guys are trying to, acquire in this skill set is something that most people are afraid to, right? And these people got PhDs, MAs, BAs, you name it, right? Emeritus beside their names and all that. But when it comes to this, they're like, man, I got a broker to handle that, or a financial planner. I ain't got time for all that. And that's fine, right? Again, we're not trying to, force feed this down everybody's throat. Oh, you got to learn how to trade stocks and invest. That's not our approach. We're just trying to make sure we can protect ourselves. And in the interim of that, we can share this stuff along the way, right? So that's the importance of that. So, all right, so let's jump right in there. So let me make sure all my stuff is good. My sound and stuff is good. I got this mic up. Okay, I ain't got my camera on. Uh-oh. It's training session. I cut my camera on. How y'all doing today? Right? Peace, power, and profit. Your brother African Poor coming to you live with the I Haru shirt on today, right? Again, knowledge brings power. Power equals profit, right? Pythagorean theorem, all that stuff. Pi, of course, this is all y'all stuff, right? They stole this from y'all, right? Yeah, y'all get it. So yeah, you have to be able to see with the eye, right? Of course, we use the third eye, right? Now, I'm not gonna get spook on y'all. Don't y'all run and start clicking off like, oh, you finna go in that spooky stuff. I won't do spooky. I'm doing strictly math based upon the parameters of what we're being, how we're being orchestrated to think and move under this paradigm, right? So we used math in terms of our, assessment when it comes to technical analysis in the same way, right? Charting, right? Again, reversion to the mean. You heard those kind of terminology before, right? Standard deviations, right? In terms of, where's your base case, right? Then from there, plus or minus below that, right? As I like to do, I dumb it down even further. I do the channel band, right? I split that thing down the middle, right? We find that accumulation, consolidation, wherever. It could be in an uptrend or downtrend or just going, vertical neutral, or horizontal neutral. And we play off that in a way to be able to be, feel more confident about where's the price action leading us to, right? Where's the money, right? Basically, where we're going to go for us to being able to get to the money, right? That's technical analysis, right? That's baseline, base case technical analysis. You cannot escape that or overlook that if you're trying to be proficient again in this. As a trader, of course, even as an investor, because we want to buy low, sell high. We don't want to buy high, in hopes that we could just, inch out a little extra gain from the highest point of, peak of profitability. That makes no sense, right? Yet, that happens a lot because people jump in with a whole lot of euphoria. They don't have their psychology right, and they just, excited about being able to make money, right? But again, there's rules to this, right? There's levels to this, right? As one would say, right? But so for us, it's all about understanding the parameters, right? So again, case in point, looking at what I have on the screen right now, this just a quick little synopsis here before we get in a little deeper, right? Technical analysis, right? Going back to the basics for a lot of us, right? If you look at this price action here along again, this is just going to be a rough look, right? I'm just going to draw some rough lines on here, right? These are just some rough lines, nothing special here, right? Don't y'all come from y'all being technical. Like, hey, that line ain't straight, brother. Right, if you looked at this price action for us, the intraday action here, right? One would say, of course, obviously there's a middle line that could be obviously seen here very, very vividly, right? Would y'all agree with that? When we say that the middle of this whole channel is very vivid, would y'all agree with that, or y'all have any clue? Anybody? Open your mics up. We are in training now. This is workshop energy, right? Anybody able to open your mic? I need me a participant. I'm about to start, but do like the teacher do. I'm finna call on somebody. Miss Jenkins in the back. Like, little Tierra, wait, I need you to come to the front of the board. Right? So.
And it looked like it fell through support.
Well, that's the overall big picture. But let's say staying inside of my channel bands here. Where is the neutrality point in this whole entire day worth of trading, right? And you can use to annotate to draw on the chart if necessary. If not, you can tell it to me. I'll draw either way. Go ahead.
About 468.
Right. So around 468, right? Again, we're talking not, let's say we say not rocket science, right? I know I say that a lot, right? Not rocket science, right? So matter of fact, let me change that color up so that way it stands out, right? So we're saying 468 was pretty much the gun line today, right? Tell about the gun line, boss, right? That was your gun line today, obviously, right? And so coming into today, it was already surmised that we was pretty much going to have a theta burn day, Thursday theta burn, right? There's even terminology that comes along with these days. If you kind of really, deep into the market game, you already know, Thursday is definitely theta burn day. Especially when there's big data coming out, the day afterwards, right? The subsequent day afterwards, like a Friday, right? In this case, CPI data. So you're going to get a market if it's already up, meaning substantially off some lows from any point, and it's kind of testing up against some real, actionable resistance levels, or we call them supply zones, if that's your standard. Then typically the day after that, it's now up for the bulls to defend, right? Now they have to play a game of defense, right? They have to keep the market from pulling back, or people from, taking profit, prematurely. Or in my case, I like to say there's no such thing as prematurely taking profit. Why? Because if you can ring the register, look, a bird in hand beat one in the bush. The goal is to make money, right? Right? Even though stocks run sometimes further out the stocks, you take profit. That happens. But the goal is to take money, right? Make profit, right? Whatever. So clearly you see what's going on here. Again, going back to some basic technical analysis. This is how, as a lot of people who are new, right? Again, this is how you'll learn how to break down chart analysis from again, very, very layman terms. And I use this, up and down the board, across different aspects of training and just, sharing it with people who have more skills and people who are learning, just starting. It's an easier way to get, more comfortable with looking at the market and being able to really dumb it down. Does that make sense a little bit? Right? Because that's the whole goal of this. You have to dumb this stuff down, right? It's not going to dumb itself down, right? It's going to go out there and try to perform to the best of its ability every day. And if you're on the wrong side of the trade, what's going to happen? Right? It can get a little ugly, right? So coming right into the gate, let's just say we use from the 9 o'clock to 10 o'clock time frame, right? So this whole 9 to 10 time frame here, this yellow circle here, is pretty much the price action that you got from that midline, that 468 gun line. And it's also known that it was a gun line too, because you got a VWAP line. So that red line there, how it kind of hit right around that point there, and then it kind of stayed at it, then got above it a little bit, came back close to that middle. And for the most days, it kind of traded right near that, that middle 468 resistance, right? So we just using this for us today because this is the case study we're using, obviously, but you're seeing exactly what we're talking about, right? So you had your march up from the gun line to the top of the resistance, which is 469, because we're talking about what? Plus zones, right? Minus zones down here, right? So everything below the gun line is minus, everything above that is what? A plus. And we know the markets like to move in what? Half, well, the market is read by half, what? And the whole dollar marks, right? So we dealing with either whole integers, right? 1, 2, 3, or we dealing with what? Half, right? Half integers, right? Right. So when you think about that from a place of saying, okay, well, if we're sitting at 468, at some point they may try to make a run at what? Run towards what? 4850 or 460 what? 469, right? So this is a basic understanding of saying that this is how money is trying to price in 50 cents, a dollar. Simple as that. Now, these people are dealing with billions and trillions of dollars, right? Millions, billions, and trillions, hundreds of thousands, all that too, right? Thousands, hundreds, tens. All that money is obviously trying to find what? Alpha, right? Find value, right? Find profit. But they operate under the mandate of what? Half dollar moves and whole dollar moves, right? Again, whole integers or half dollar marks, half dollar hashes, right? So in terms of that, so if you split that down the middle, right? Let me do this right. It's not going to be the most cleanest line because I don't have my rule up, but I want to show you exactly what I'm talking about. And then the same way on the minus side, what do you see now? Does it start to look more interesting now? Any of you guys, does that start to look more interesting now in terms of a way to kind of grid line the market? Like, if you got like, well, my Atlanta people at, right? If you're out there on 285, right? 285, right? All them lanes, right? You out there think you're on the drag strip, right? Get the slow people out the HOV lane, so the people that's in the HOV lane can ride, right? This is how you're doing. You're grid lining the market to kind of give a better perspective, right? Does that make sense? So this is an easy way to go back to the basics of learning how to, again, do some proper technical analysis. Again, from the ground up. This is you not having to have read one book about this stuff, any of that stuff. Your eyes are not deceiving you. You see the money here, right? Money's made what? When the markets go up, money's made when the markets go down, and money is also made when the markets are going what? Sideways, right? Right? Condor, butterfly, right? Neutrality, right? So clearly here, that's how you're breaking down opportunity, right? This is how you're breaking down opportunity, guys. Again, this stuff is not, I'm saying this, with all due respect to everybody's, level of learning, but it really isn't rocket science. It's not. Again, we was on this stuff in grade level school when they used to teach us about bar charts, pie charts, right? Stuff like that, right? Whether we missed that class or we didn't, or meaning we paid attention, not, or the importance of it, right? Algebra, calculus, trigonometry, moving into geometry, right? Moving to geometric shapes and, linear values in that regard. And, again, not outside of our ability to comprehend is my point. And this is as elementary as it gets. Why? Because you have what? Color coding that gives you a supremacist value of where, people may be feeling excited about something when they might not be feeling so excited about it, right? Obviously, green means what? Right? Green means go, right? Yes. And red means what? Right? Stop, right? Red light, stop light, right? Red light, green light. Y'all remember that game? I'm finna show my age now, but y'all know about that game. Y'all young people, that let me leave that. Move on, brother. So we play red light, green light, right? I should say red means stop, right? Basically, right? Or stop, right? I don't know why I just put go and stop or go in red, excuse me. But y'all get the point. So going back to what I'm looking to kind of get you guys to see here. This is how you plot money in the markets. So if we use the big yellow circle to kind of obtain the top band of the resistance and the lower band of support. Why? Because it was established early on in the market. Well, how do I know that? Well, obviously we see later on, in the day that it kind of respected that same level. Why? Because in the beginning, we had to let the market unfold a little bit. So in doing so, we have a range where the market did just that. You hit peak early on, right? Literally within the first, matter of fact, let me show you. See right here? That's the first, from 30 minutes, right? The first 30 minutes in the market right there in that line. You see, I got it on 9:30, right? Even though it's kind of small, I should go to trading view chart, but I'm using this for a reason. I'm finna be a little bit more, like the eye doctor finna do. I'm finna make you work your eyes a little bit here to find the nugget, right? Find that needle in the haystack. That's the first 30 minutes of the market, right? As it says, it's showing here, excuse me, the market opened up at what? 468.15, right? And hit a high of 468.72.5, right? That's the first 5 minutes, right? Okay, now let's put it in terms of 30 minutes, right? So from 9:30 to 10, right? Let's find 10 o'clock, right? Let's find 10 o'clock, right? And move over here, 10 o'clock. 10 o'clock was put us round about right here. So at the point of 10 o'clock, the market was in that at the open of this candle at 468.20 and had a high of 468.81. So basically about the same length of movement you got within the first 5 minutes of trading. How about that? Right? It's crazy, right? When you see stuff like that in 30 minutes of trading, that means it's going to be a very choppy market until we have a very directional bias start to unfold itself, right? Which we knew coming into today was already going to be a choppy day to a degree. Why? Because there was no definitive reason to catapult the markets any higher than it did off the lows that it came from, on the daily anyway. So these people are just playing what they call the game of, tug of war, right? Take a little supremacy, push the bulls, the bears back, hold the line, hold, right? Hold. And now you're playing defense, right? Exposed to offense, protecting what you've already been able to obtain away from the bears in terms of pulling the market off the lows. And now we up at a place where we're above some key levels of what? Resistance, right? 461 was the notable one. We talked about that early on, right? Was no secret there. So everything above that is air and opportunity back towards some key levels of what? Resistance that we established from the lower highs, right? The previous lower highs, that is. Now going into today, again, using this as a very simple scenario, again, very simple. I'm going to come back to this this chart here, and we're going to start to kind of infuse our little what they call opportunities or opportunity zones, right? So begin using 30 minutes, the 5-minute candles, but within these hash mark areas, you're going to be able to see exactly what I'm talking about here, right? Opportunity zone, midline, gun line to pink line. Remember, the gun line is the pink line. Tell them about the gun line, boss, right? And then the bottom, obviously the white line, those are your basic, your they call your pseudo resistance, pseudo supports, right? Right. As of today in this channel, right? Because we established a supremacy early on in terms of peak to trough, right? The peak, obviously in this case, came at what? 469. Y'all see it clearly right here, right? It could not break above that area. It hit it twice today, right? You double top that in the intraday scenario. And then we had what? 467. Now, clearly the market right now still after hours, the market's still moving. Where is this stock still trying to play at into right now? It's up against that point of resistance. Excuse me. The old support now became new resistance. Excuse me. Once the market falls below that point, now it has peaked itself up above it here in the after hour session. This is all futures market, of course, but it's above that 467 what resistance now, right? So it's easy gonna have to try to trend higher to get up, get above that and stay within that penalty box, or it's going to fail in the after hour futures here session within, between 9 and 8 o'clock. It's going to come back, inside that 466 area, right? So this is the game of supremacy that I'm talking about. This is people trying to establish, a sentimental, well, I say a psychological or sentimental scenario where they're saying, okay, we got control of the chart, right? Now, again, these little hash marks, these little yellow circles are, again, these are your price action point pivot points, right? You got one right there, right? And these are all 50-cent increments. So let me reiterate that. Some of you guys may be still kind of, catching up a little bit. These are 50 cents, 50 cent areas, right? 50 cents, right? So you see it right here. So I'm gonna draw all these circles here for a reason. They're gonna look a little ugly in a minute, but y'all gonna get the point, right? It's all for edification. There's another one there, right? Of course, over here, right? And these are the pockets, right? The air pockets, right? The air bubble, the air pocket, whatever, right? Air Max 99, y'all know about them air, right? Y'all see it, right? Another one here, even though it's small. This one here didn't quite, go up into that point. But those are all your 50-cent hash marks throughout the entire day of the trading in the SP 500, right? 50-cent circles, literally. Now we're talking about hundreds of thousands of dollars, millions of dollars, billions and trillions of money, trillions throughout the day, of course, when it's all tallied, right? There's a lot of money that go into the market every day. Trillions, basically with a T. Even when it seems to be low volume days, right? There's still people moving big money around, so some status. But people are making tons of money off that 50 cents using basic common shares, like buying the shares outright, or they're trading the options market, right? Where you get more for less, right? Right. What's a little commercial out there where you get more for less? One of them little TV, y'all know what I'm talking about, right? But this is it, right? This is, again, going back to the basic. Dumb the market down so you don't have to struggle with trying to make these old, hard, antiquated guess, decisions and just hoping you end up being right. That's not how you want to, that's not how you want to monitor your money, right? This is not gambling. This is not, we're not at the dice game. We're not playing CeeLo and all that, right? I'm a three dice people at, right? We're not, we're not playing, spades and, betting it all on, on a boat, right? This is just, again, you're trying to make a calculated decision based upon the rules of engagement, what the price action is showing you in this moment, right? Based upon being able to kind of play with some really good risk management, right? That's what technical analysis is for, right? It's supposed to help you be better and confident in your risk management, right? Levels to where your money could be best suited, spent, invested, whatever, and not feel like you just trying to throwing it out there. Like, okay, I got, $1,000 a day. I'm going to see what this thing going to do. Okay, well, where's your entry? Or do you have an exit mapped out? Okay, what's your risk versus reward? Do you have a plan at all? Okay, you going to just, chance it all to just the fate, right? Okay. That's a person's right? Again, whatever people try to do with their own money, that's up to them. But from our perspective, we're not going to play from that game plan because we know it's not going to be, number one, you can't sustain that on a consistent basis and be profitable as a trader, period. I don't care who you are. No matter where you get your training from, wherever you're going, if people are not talking to you direct like that and straightforward like that, then they may have an agenda, right? And that's not good because you have everything that we can show you the markets can be back tested to the degree where we can at least make sense of it all. Historical records, right? Previous look to the left, establish the past, right? And just day-to-day price action itself based upon, candles, patterns, things like that, right? So you have to be aware of that, right? You have to be aware of that. So 50 cent, 50 cent moves throughout the day. So we can obviously looking at today's price action, we can easily surmise that the 469s, the 468s, and then the 467, plot levels today were the most heavily, planned zones that people were trading at or around today. And we can obviously, obtain that knowledge by looking at what? Going through options flow charts, right? Looking at where people may be stacking in the option market. Again, if you watch the market today through like level 2, you seeing where people are starting to get more excited at on level 2, right? Because level 2 actually gives you what? That bid and ask where people might be stacked at, if they stacked that 468 neutrality, if they stacked that 469 resistance, or they stacked at that 467 support, you can see that in real time when the market is moving. True story. It's right there on level 2, right? Some of you guys may be still learning level 2. We can get into that a little bit too, but it's another understanding where people are buying and selling that. Again, the bid and the ask, the spread within that, where people feel good about money. And those being the extreme levels, everything inside of that is what we call what? Our micro, our micro points, right? Our micro pseudo, if you want to call them pseudo, our micro points of what? Support and resistance, right? That $0.50, again, that $0.50 mark, and then that what? Those whole dollar mark, the whole dollar interest, like $1, $2, right? Or, 50 cents, right? And most times people are buying at those points anyway, because human nature, right? It's the conditioning that we either deal with $0.50 or whole dollar, right? Again, nobody likes to deal with $19.99. Dude, just go and say 20, right? Because they know you're going to give them a whole 20, right? Why don't you give me $19.97? All right, man, here, take the whole dub, right? Them 3 pennies ain't going to kill me. But guess what? Them 3 pennies add up, right? Over time they do, of course. But that's the mentality, is my point, right? So again, this is you being able to plot that and not struggle. Now, again, if I take away, let's do this here. All right, hold up, I didn't mean to take that line away. I forgot this eraser so big. It's all right, I put them back. I can draw it back. No big deal. No big deal. We draw them back, right? Now, if we take away basically all that we put up there, and you have to, look at this from a naked eye perspective, again, without grid lines, guidelines, all that stuff, right? Training wheels, right? On your bicycle, right? And training wheel, right? With the banana seat, old school, right? Again, you can clearly see here how the market, fared throughout, for the most part of the day, right? Where was the strength, right? Where was the weaknesses, right? Not hard to see that. Now, if we was to kind of put some curves to that line, right? We'll to put some, some sister curves on that, right? Them sister curves, right? Y'all know what I'm talking about them sister curves, right? No disrespect to labor, but y'all know what I'm talking about. Them sister curves will give you a more accurate depiction of exactly what's going on here with the market, right? Where, again, you got resistance levels, obviously everything, above entry price, and you got support point, right? Everything below entry price, right? Now, again, if you map that linear move, right, meaning that kind of value from peak to trough, you can see or surmise exactly how much money that is worth just out the gate, right? So again, if this all unfolding in real time while you watch the market in real time, of course, you don't know unless it's, until it starts to unfold, but that's the whole point about back testing, right? Until you establish some plot zones, then you got something to work with. Once you have something to work with, you can always you can trade better. Now, outside of that, if you're a little bit more savvy, then guess what? Now you understand how to play off of, the potentiality where markets already kind of gave you a window of where they came from previously, right? That's when you started going in the pre-market, futures market on the previous day before that. Now, the previous day, as you can see right here, look up here at the very top up here, right? Let me remove this here. This little resistance wording up here. You see right there, it says yesterday's close price, right? Of course, I have this on this little chart I'm using. But this was yesterday's closing price, meaning the market closed at 469.52. Obviously, we open up below that. And so, again, the bulls were playing a game of defense, keep the market from going any lower than necessary at this point so we can establish supremacy in this new level of what? Or this new channel that we're starting to kind of create, right? On a bigger picture, try to potentially go higher, right? So 469.52 was what they call, that's your, looking at, that's resistance based upon, market closed there yesterday, if nothing else. Everything underneath that is going to be a pseudo resistance, right? Or a pseudo support once a base case been established, right? So clearly here, let me take this off for a second so I can give you accurate description. All right, so literally right here, about 9:45-ish, that white line's up in the way. Let me remove that. Forgive me, guys. 1 second. I want you guys to see this. And again, I'm using this small chart for a reason. I want you to work your eyes today. All right, I'm not going to run to the old big old lavish trading view one for a reason. Right? Right. So clearly right here, again, you see here, right around here, of course, there's that 5 minutes, first 5 minutes, 35. right? You peaked at around that point early on, and then you pull back, right? You pull back. So from 9:35 until 10:25, so roughly, close to that of about what, 50 minutes, right? 50 minutes, you saw the market go from neutrality at 468 to 469, peak resistance, come all the way down and hit support at 467, established that was going to be your bottom. So far in that moment, within that first hour of trading, that was your moment right then. If you already had traded inside of that early on, if you're just waiting for the market kind of give you some directional value, instantly right then and there, you saw, okay, there's my support and there's my resistance until something else changes. Does that make sense, guys? Y'all with me there? Until something else changes, that's my support, my resistance. That's all you got to work with. Now, if you're a bit more savvy, of course, you can go back and look to the left again and see what the chart was doing previous before that and see if it hit those areas of 467 or 469, which would have gave you clear indication. But I'm using intraday for a reason, because I want to show you, even doing real-time price action, you're still able to be able to reference that and chart that. Again, this is you going back to the basics and realizing the importance of how you need to plot out the money, right? Where's my lines of my grid line? Where am I walking, right? You got old folk, get my walker, right? Again, give me a wheelchair, right? Look, you have to be able to do that. And this is speaking more to the intraday trader. I get it, but guess what? If you long-term investing, this also applies. Why? Because again, the goal is to buy low, sell high. Yeah, buy low, sell high, right? That's the name of the game. So if we put our training wheels back up here, right? Again, don't y'all come for my drawing line. This ain't supposed to be eagle-eye accurate, but y'all get what I'm saying. 467, 468, right? Those are, 469 and 467. Those are support resistance points, right? Now you start to say to yourself, okay, here's the resistance until something changes. Here's the support unless something else changes. Guess what? If you didn't trade that first hour of the market because you were just unsure and the volatility was too much for you, and you was like, nah, I ain't ready to risk it right now. After that first hour unfolded, you hit a peak and then you established a trough and it bounced off both, your eyes are not deceiving you in that moment. Unless something changes, that's all you have to work with. That's it. That's all you got to work with until something changes. So you say to yourself instantly, okay, peak, trough, right? Support, resistance, everything after that is fair game. I have the ability to play off this bottom trough all the way back towards what? At least, if nothing else, what? 469, right? If nothing else, 469 from 467. That's 2 points. 2 points, right? Or $2 of opportunistic money. $2 whole of opportunistic money. Again, I'm using the SPY for a reason, because again, it's the mother of all tick, right? It's the one that everybody trade, but I'm just showing you the efficiency of trading, proper technical analysis and how to move this into your thesis to be able to make better sound decisions. That's 2 whole points, unless something changes, right? Now it was choppy and it was grinding and what all over the place, but we understand that we've already talked about this before. Rush hour traffic of the market is typically between what hours? And then you go through what they call lunch period, and then you go through after lunch period, and then you get ready for power hour. We've broken this stuff down many times and showed you exactly how markets are moving in respect to, like, if you was on a job or trading, at a job, you was watching the time clock, when people taking breaks, when people going through all that. It's the same thing in a lot of ways. Again, man, humans are so much more parallel than they try to act like they're so different, right? And some of the just basic, involuntary aspects of their movement. Some of it's trained, of course, and it's coached. Again, like a time clock. You get coached, your body get, circadian rhythm, adjust the times that you have to get up in the morning. You wake up before your alarm clock a lot of times, like, God, dog it. I woke up before the alarm clock. I didn't cheated myself. Circadian rhythm. Your mind is already understanding that it's wired to say, I got to get up and go to work. See how that works? I ain't telling y'all nothing that y'all don't know, of course. I'm just saying, markets is already kind of, somewhat moving under that same energy in a lot of ways. They know when people are going to get scared that you want to take profit, when they sitting there antsy, they nervous, or, they're not patient. They're not patient enough to let the stock or the opportunity unfold, and they jumping in again. a little too early, or you're getting out a little too late, right? The market will punish you more in those moments than some. Why? Because you're not being, conscious of the rules of engagement under a solid technical analysis to give you some guidelines, grid lines, and bars or whatever, and then understanding any kind of fundamental driving mechanism behind the market, right? The energy, the news, the relative value that says this is going to be an influx of cash or a decrease in cash based upon this news that also may be moving markets. Of course, fundamental analysis, a fundamental, a driving mechanism that pushes markets, right? So again, this is all understanding the importance of why you have to be able to plot this to the best of your ability and leave at that point, you've done all you can do. And then of course, when you add in the fundamental part of it as well, you feel more confident about your decision-making to take that trade or don't. You're not feeling like you're guessing at that point. Make sense? So I always tell people, man, they're like, man, but I did this and I did that. But apparently you must have left out a couple things too, right? Because maybe you got a little too excited, right? Which is a part of your emotional, psychological conditioning that you don't bring your emotion to the market. It's hard not to when you deal with money. I get it. But guess what? That's a part of what makes this the unique. And there's people who can see your emotions just by looking at the numbers on the chart. They can look at level 2 and see stop losses and all that stuff like that. They see what's going on right there. They read your emotions by your stop losses. They read your emotions about you putting orders on, limits order, and pulling them off quick, putting them back on, taking them off quick. They see what you're trying to establish a point of an entry, and they'll just kind of, especially if you're trying to get in on a dip buy, right? Market makers see you doing that off and on, people early in the morning trying to get in, and they just keep bumping the price up a little higher and higher. 1 cent, 2 cents, 3 cents. Now you got to chase it. You're chasing to get in at this point. Now you done went against the grain of what your entry price thesis that you had in play that you want to get in at. And now you plan on paying additional 15 cents to get in when you was trying to get in 15 cents cheaper. Now you got only a small window to get to that point of resistance. If the market can break beyond that to give you an extra bang of money, you plan from a 15 cent deficit or 15% deficit because you chased and, again, you didn't stick to your rules, so to speak. Does that make sense a little bit? Y'all guys with me there? That's the market. Seen this stuff like a gazillion times. Market makers will make you chase certain positions if you kind of slow to move, right? You still undecided and you're like, I'm gonna wait now. And then it start going up and you're like, you start watching, you get FOMO, fear of missing out, you start chasing it. And now you in at 20, 30%, 20, 30, 40, 50% higher than what you would have if you said, okay, I'm sticking to my gun. This is my entry point. If I miss that, guess what? I'm not going to chase it. Or you have a cushion, right? Most people do have a cushion. Granted, we do. You say, okay, my cushion is no more than maybe 10 cents, right? Plus minus 10 cents. Obviously, plus 10 cents. Because if it's going up, you're playing from the bottom. If you're shorting, it'd be the opposite. It'd be, minus 10. But that's it. Anything above that, I'm not going to chase it because there's only so much the stock probably going to give me, right? It could probably run and still keep going to the moon. That's okay. Right? That's okay. And you don't have to change your mind just because it boom, 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 spaz out beyond the entry to the point and it just keeps riding. That's okay. That's discipline. That's discipline. Again, we're talking about a pound of flesh here, right? You rather give up a pound of flesh, right? For a moment of just, positive preventive maintenance. It's not worth it. Right? It's not worth it. That's why preventive maintenance checks and services are important. You have to scout before you jump on out there. I've known, I don't know too many people that go into battle without having to, scout and plan and strategize and you jump out. Sometimes fights happen at spur of the moment. They do, of course, but rarely, in case of what you call organized war, if there's such thing, do people come to the battlefield unprepared. Right? You don't show up to a basketball game knowing you got, this is the state championship. You got no sleep last night because you was up all night while not. You show up, you got one shoe, can't find your other shoe. Your jersey's still in the dryer. You got to go, drive halfway back home to get your shirt. That kind of stuff, right? Like, no, who does that? And there's people that do that. They're unprepared. They're disorganized. Again, they don't have a proper technical analysis on their personal life. So this is a part about you being organized, right? You're trying to run an online business. and you showing up, again, whether you wake up for pre-market at 4 a.m. or you say, well, I typically want to get around at 7:30 to get prepared for the market to open up. Once your body get used to that too, you'll wake up naturally like you would if you're riding somebody's clock the same way, right? Or the excitement thereof, if you're really excited about this craft, you'll wake up anyway. You're like, man, I want to see what's going on with the market, right? But again, at least you're coming in prepared. You're not showing up at 9:45 and saying, I'm just gonna jump right at the market. Had no chance to scout the market, see what's going on. You're gonna get your head knocked off, right? You're gonna get your pockets ring, and you can get lucky too in the same breath and make some money in that regard. But we're not gonna vouch for that. Like if you make gains in that moment, good luck. But I'm not gonna be like, yeah, man, you killed it. No, I'm not gonna vouch for that. Because I know those are bad habits. You're getting the habit of saying, okay, I can do this all the time. We're not going to profess that over here. Because that's not how you're going to learn how to be consistent. You see what I'm saying? Right? We're not going to reward, one-off, behavior, right? That's not how the markets work. Markets don't work that way because guess what? Go try to do that again the next day. Let me know what your results are. Right? Yeah. Try that, yeah. Okay. Markets already ready to take, right? Ready to take from, right? So again, that's what I'm saying. So it's better to be consistent in your plan and preparation skill set than it is, and you just trying to feel like you can, challenge the market, just with no understanding of what may not happen. Right? We're not gambling again. This is not a dice, blackjack, right? This is not blackjack, right? This is not a flip of a card. So going back to what we're talking about here, resistance support already plotted within the first hour of trading. If you sat in your hands that entire time, you had a clear support and a clear resistance at least that point of the market. And from that point on, you had established a resistance point of potential money that you can make until that point of peak profitability, which is $2. If nothing else, you had what? A 50-cent hash mark, obviously, and a whole dollar hash mark in the middle of neutrality where the market kind of open up at or around. So for all my option traders, once that was established, you got a clear 50 cent. That's a lot of money on a 100 shares implied value of an option contract. The same way on a whole dollar, right? A whole dollar right here, a whole dollar. Back to that neutrality point or what that mean line reversion or deviation of 468 because that's what we kind of trended at. That's 50 cent and a dollar right there. So all you have to do is buy in the money. Of course, how if you trade it from that perspective, or if you want to buy out the money, you're not buying out of the money no more than what? In this case, after we plotted this, no more than 50 cents or a whole dollar. Right now, if you want to play for that 469, okay, yeah, that's extreme case. You could play for the $2 move, right? Because you already got a support resist that gives you a $2 window. That ain't rocket science. That ain't beyond the ideal that you can play that, right? If you want to spend that little extra premium to buy in the money or a little out of the money at the hash mark or the whole dollar mark, well, go ahead and pay it, pay it for that 50 cent on the plus side or that whole extra dollar on the top side resistance. Not unfathomable, but of course, in my opinion, even though you didn't have what they call, zero DTE, right? Before, the contract expired today, you still have the other day tomorrow. You could be a little bit more, frugal, or not there frugal, but still a little bit more lax and see, I'll play, $1.50 out, right? Or, $2 out for that 469. Cause granted, if the market bounces hard and goes back towards that resistance and it breaks that, but guess what? The next level of resistance we're looking for is what? Yesterday's closing price. What it priced? $469.52. Another 50 cent extra bump that you had from that 469 that you could have potentially played into. See, that's all here. It's technical, it's discipline, it's understanding the rules of engagement based upon the guidelines and grid lines that you're going to perform when you do your technical analysis. Again, that's before we get all into the names of the candles and what pattern is this and what that. Look, take it back to old school. Put you some lines on the chart and make you a highway or make you a road. That's why I keep doing this way for real. I'm trying to get y'all used to it. All I'm doing is making a road on the chart every day. Here's my top, here's my left lane, or here's my right side of that lane. Here's my middle slash marks in between, right? My little hash mark, that, right? And you out there DUI driving, you cross over that line there, boy. They're gonna be sitting out there waiting on you, right? So yeah, stay in your lane. Right? There's reasons to this. It's method of my madness why I do stuff I do. Stay in your lane. If you ain't ready to jump out in the HOV lane, stay in your lane because it's not worth risking. Right? Do what you can do good until you can become better at it. And then you can switch lanes at that point and do all that other fancy stuff. For now, you're just learning how to kind of plot the market in a very, very baseline manner to be able to deal with this. Why is this important to talk about this now? Why? Because volatility is awoke now. And some of you guys have never been in the market where you see extreme volatility. Now we kind of off and on because of late, but yeah, this is where people make most of their money when volatility pops up. Why? Because we talked about this before. Why? Because we're dealing with what? Expansion, massive expansion, reversions from the mean. There's no way you can control the market now when you have a lot of capitulation and emotion involved. The market moves very quick. It's taking out stop losses, rating stop loss for shorts and longs. That means the market's open up. It's moving from big pivot points down, back up, sideways, back up, back down hard, like you see down the back end of the day here. Clearly, what you got on the back end of the day here, but the market kind of rolled over, right? After it hit that resistance twice and couldn't break above it, yeah, of course it hit it more than twice, but we use that as a double top frame of reference because clearly that's what you got there. Now we talk about technical now some more. What is a double top? What does a double top denote? Anybody? What is a double top? Anybody? Open you might if you can. What does a double top denote?
No.
Say again, over. You
On a signal downtrend.
Downtrend or what?
What
kind of signal?
Downtrend.
Or we know affectionately known as a what?
Bearish signal.
A bearish signal, right? Clearly, that's technical analysis 101, old school, bear and a bull, right? You hitting resistance, can't break above it, you instantly going to end up with what? Some kind of pullback, downtrend, or bearish signal. After establishing that supremacy early on, you figured out what your peak and trough, just like looking at this, you got a $2 window. If you play back towards that $2.469, you make it all the way back up there, off this low, off this pivot point here. Guess what? If you know you day trading, you ring that register, you collect that bag, you fold that money. Don't sit there and say, oh, I know we're going to 469.52 at that point. You may have a small 5-minute candle to prove that if it can't close above that 469 and kind of try to push to go higher, instantly right after that point, if it does, you put your stop loss right at what? 469. That way you make sure you lock in those $2 that you just made off this 467 pivot point. You make sure you lock that in at 469. Does that make sense, guys? Why risk it? You just made 2 points by making a calculative decision on support resistance, clear as day, as you can see here. That's before all this even unfold. You established that earlier within the first hour. Here's my peak, right? Here's my what? My trough. Let's play ball. That's the importance of being patient and not just jumping out the window too soon, because it's hard when your emotions is running. You see other people already in the market, they may be making money. They might have swung some trades from the next day though. That's why you just can't bank on that. This was just something they just did early and was like, so, man, this person solid. They just jumped right out the gate, went right up 50, whole dollar, sold, bought some puts way back down, sold the half marks of somebody and sold the rest at the 460. Look, there's some people out there that's good enough to swing that. But again, as I said earlier, stay in your lane until you're ready to travel across some different lanes and do all that extra, then be comfortable learning how to be comfortable and slowing the market down like Neo in the Matrix. Again, it's different things moving like this right here and a difference between things moving like this right here. Slowing it down. You got it now. You see things more clear when things are slower. With my chop and screw Texas family at in the house, right? Chop and screw, right? People like, man, if you listen to that slow music like that, man, it's gonna make you slow. I bet.
Right on. Right? I beg to disagree. It's a I beg to disagree. Baby.
So you come through over, right? You Texas in the house, right? Swingers, right? Now you get to tell if the people got some real lyrics tonight. Slow the lyrics down. You let you know if a joker mama rapping or if they really got some real bars. Slow them down, right? Just like that joker ain't got no bars. Slow him down. They're like, yeah, he ain't got no bars, right? See, again, you got to realize, again, the name of the game here is to dumb the markets down. Make it make sense. This can be applied across all asset classes. Forex, crypto, whatever you trade, binary option, those are just the different ways whatever asset values, but it's all the same. It still stems from a technical breakdown of what? Give me some support resistance points, give me some plot levels in between that, give me some probability points, some bell curves, right? Give me all that and let me go find this money. That's basics. That's 101. If you want to be good at this, that's the basics. That's the least you should be focusing in terms of being able to kind of really home in on that skill set. Y'all with me there? You cannot get around that. All right. Look, it's just not even worth it, right? It's not worth it. Get this part of your game down above all things. You might struggle a little bit with fundamentals and reading S1 filers and S4 and 13D filers and all this stuff, 8Ks and 10Ks. That's fine. You can, put on an Audible book and learn that stuff and just learn how to get through the base of that aspect of fundamentals in terms of dealing with price to book, price to sales, market caps, and all that stuff like that. But at the end of the day, you're still dealing with a game of what? A game of intraday price action, right? Now, clearly, as you can see on my screen right here, what do you see? See right there? Said the market also that 467 is now resistant because the market broke down below it, right? See right there what the market did right here? And after hour trading, it went slightly above the 467 resistance, meandered around at or around it, trying to close above it. And then clearly that was what? Resistance, right? Because it lost that supremacy line earlier. Guess what the future's doing right now? It's back trending back down again right here, right? You see that blue line right there I'm drawing? See, that ain't rocket science. So if I'm a short seller after I was trading the market, I'm like, oh, 467, definitely resistant. Unless the thing break and show me this about that line, I'm going to take me a short position right here at 467 and prove the market wrong. Because it has a mountain that it had to climb off the low point at 466. That's the new channel. Now it's coming, showing, this is the resistance in this new channel. Get what? Let me get that whole 40, 50, 60 cent that they just made right there. Now, keep in mind, I told you earlier, people doing this with millions of dollars, hundreds of thousands of dollars, tens of thousands of dollars. That's a lot of money. Again, 40, 50 cents is a lot of money when it comes to 50 cents. 50 cents, 50. AKA Ferrari. I'm fit. How go them balls go? Where my rappers at now, right? What my name is? Fit. I even got the song go. Y'all know what I'm saying, right? Right.
AKA Ferrari F50. You know what to do, man.
Right. Come through, right, with the balls, right? Balls.
So you a gangster, but you never cop nothing.
How the rest of that go? We might finish it out at this point. You say the gangster, but you never caught nothing. You say you a.
You say you're a gangster, but you never cop nothing. You go to the dealership, but you never drop nothing. You've been hustling a long time, and you ain't got nothing.
That's right. See, balls, right? I wish I had a bomb sound effect, because I'd blow it up right there. Boom. Because that's exactly what you're going to deal with people that's coming to y'all trying to, again, hey, I got this, I got that. We can show you how to do this. We can show you how to make $1,000, within the first hour of the month. Everybody got an angle. But see, one thing about this, consistency is the key, right? Consistency is the key. If you don't learn how to drown a lot of that noise out, again, eat the meat, spit the bone, you'll fall into those traps. You got to learn how to play ball on your time, under your dime, because keep in mind, this is your money you're using, not theirs. Unless you're using somebody else's, brokerage app or, CFDs, whatever. Outside of that, you're using your money. Especially in the options market, y'all know we pretty much cash is king in our book, because we're not playing on margin. Now you can get margin in option trading, but for the most part, you playing with what your dollars in that trading account is sitting at. So it's the most ultimate, in my opinion, it's the ultimate, window or a synopsis of when we say performance-based, because options are very dangerous, but it's also very lucrative if you learn how to, trade thoroughly under the rules of the game. And keep in mind, you don't have to do this on a day trade. You can swing trade options, obviously. That's why they got contracts, days of it, before they expire, right? This you test driving it before you want to buy it outright, right? Leaps, short terms, whatever. So, but it's saying that, okay, I wouldn't, debit my account, this value to kind of play into this thesis of this is where I think the market's going to go. Right? That's performance-based. You have to have some strategy, right? I'm about to say old school strategy, right? Florida style strategy. You got to get some strategy. That's the markets, right? You cannot omit that. Look, you already know how I am. You know, I'm the most humble dude out there, and I meet people where they are. People come to me with all kind of, you know, they be raging. Then some people come to me also, dude. Everybody want to, you know, this. That. I'm like, I'm always gonna meet people where they're at. Like, look, okay, you might have to look at it from this perspective, right? Humble as possible, right? Because I'm happy that people are excited about wanting to be in a position where they can use these asset markets to help their situation, their bottom line for a change, because a lot of us are not in this, and we're far and few between in this, and that to me is somewhat problematic. Not that people have to be in it, but we realize that money is being curated and made by the value of using these assets to do the dirty work for them, as opposed to them getting all dirty trying to get it. That's the importance of investing, right? In any aspect of investing, right? If it be art, you know, collectibles, whatever, if there's a premium attached to it, appreciation value attached to it, yeah, you know, it's worth doing the research to figure out, you know, exactly how can you get the best bang for your buck from it, right? So this is another aspect of that, right? Markets are just that, buyers and sellers and the whole trough of, you know, all the ins and outs that comes along within this. Make sense? So again, that's why, you know, you have to see markets, again, from the aspect that the markets are always right, even though we know it's crazy. It could be manipulated. It could be, you know, I mean, it could be just a smorgasbord of this, all kind of people from all walks of life and different emotions. They just call the market to be all over the place, right? That's what you got lately because of COVID. Because a lot of what they call newbie investors came in because of the idea there was nothing else out there to get invested in, and they came in the market and messed up a lot of the price action, right? So analysts on Wall Street was not used to all that, right? The Wall Street bets kind of people, right? The Reddit crew. What they did with GameStop and AMC was nothing that hadn't happened in the market before. To them, it was just like, oh, we broke the market. No, y'all didn't. That stuff been happening since the market been open. It's always been pump and dumps. There's always been an opportunity where people felt good about a stock again, you know, and then whether it turned out to be materially good or it fizzled out later on, markets will find a way to wind it out. Keep in mind, these people are dealing with millions and billions. You coming in with your little 1,000, 10,000, 100,000, 100 racks, a million, even a million. And look, these people dealing with billions and trillions, bro. How you gonna compete against that? Yeah, you get an army of people with you. You can go to, you know, battle. You can win a battle, but you ain't gonna win the war, right? No, I ain't trying to, you know, dampen, pee on nobody parade, but that's how the market is. You have to have a sound game to really validate why this company is worth what you're trying to say it's worth, right? If you can't do that and you just like, oh, I just think it's gonna be good just because it is, that's not how the game works. No. Case in point, GameStop, right? GameStop just had earnings literally yesterday. What happened with GameStop? Oh, we finna go back to the moon. We're gonna short squeeze. Now, granted, GameStop only had about 9% of the float short going into this earning. Why? Because they already, market makers and people, smart people already got, you know, smart about this. They already know how to trade that stock now. They have enough data to figure out exactly how these Wall Street bets and people like that are trading now to make sure they never have, you know, that much overexposure and short value to these crazy people that's going to buy it, whether it's good, bad, and different news, and they don't get caught. They're going to let them cannibalize themselves, meaning people going to get impatient because they're not getting this big squeeze that they planning for, and then this is what they're going to start selling. Hold the line, bro. Diamond hands, bro. You got toilet paper hands, boy. You weak. Now, look, your own people selling. Who you going to blame that on? Citadel? Melvin Capital? Who? You can't blame it on nobody. It's your own people. It's cannibalization. Because people that got capital that they could be deploying in the other potential great stocks, and this one here just sitting there holding up all their money tied up in this one, it ain't going nowhere. See how that work? That's markets. So that's why I say, you know, you got to realize that this is a game of follow the money. You can't make the money follow you. I mean, if yours is smaller than theirs, look, you better have a what they call a diamond in the rough kind of asset then. And everybody just late to kind of figure out how good it's going to be. That happens sometimes, rarely. But for the most part, that's not how the game works. That is not, right? That is not. So again, this is why all these things meld and mesh together. You got to have a solid technical analysis game to be able to slow this stuff down. If not, again, the end result is going to be catastrophic. Meaning, yeah, you may say, oh, I only lost $5 here, only lost 10 here, only lost 100 here, only lost 250, I only lost 1,000, bro. I get it back. See, that's a pattern of what? Bad behavior right there. When you get to the point where you start making excuses for your more losses than gains and winning, you on a free fall that continues to keep losing. Let me let that marinate for a moment. You're on a free fall to keep losing. Again, $1, $2, 10, 50. Look, to you, like, okay, it was worth the chance. Okay, yeah. So you playing the game of chance and not playing the game of strategy, then guess what? That stuff adds up. Before you know it, you down 2,000, 3,000. Guess what? That 2,000, 3,000 could have been more useful, and maybe in a long-term leap in a good stock that has a good moat, good balance sheet, good opportunity ahead of itself in terms of its present day value, and it would have been well preserved in that, as opposed to trying to chase these small time pop gains, small time potential, pullbacks that ain't, may not yield. Because again, you may be excited about a stock, but the entire market may not. Right? The entire market may not. See, that's the difference, because again, at the end of the day, the numbers are not going to lie. Right? Right? The market's not going to lie. Right? As they say, the numbers don't lie. That's what the markets are telling you. Like, market, like, bruh, I had a sound effect, bruh. Right?
Yeah. Even when a company gets good news, don't mean that it's gonna go up.
Exactly. I've seen FDA approvals, bomb. I've seen adcoms, bomb. I've seen patents, bomb. CE from European clearances, I've seen them bomb. I've seen buyouts. They get a little initial pop, and then they kind of just trend sideways from that point. And look, I've seen all of it. All of it. Unless something new come out that I ain't seen yet. I had a little song go. I've seen it all, but now I'm going back to my little rap song. I was down in the holidays, so the nephews and stuff playing out. I've seen it all. And look, I've seen it all. And so eventually you guys will too. So that way, when you see it, you're like, okay, let me see exactly what's going on here. Did the stock run into this news, right? Is this a buy the rumor, sell the news event? Or is there just more premium attached to this because the stock was already at oversold point and we're playing from the base effect? So even though it ran 15% into this news, but it was already at the most oversold point the stock has ever been. So yeah, it still may have another 50% pop ahead of it, another 100% potential they can run after this. You know what I'm saying? All that stuff matters. And let me see what the short interest looks like. Are there more people shorting it still, and they playing off the fact that they think stock gonna roll over on this news? Okay, they trapped now. Oh, we can squeeze and go higher now, possibly. See, there's a lot of moving parts here, but it's not as jumbled up as one would think. It really isn't. Once you get through a lot of this, the basic stuff of understanding how all those things move and how they work in tandem, it's no different. You go into your light switch in your house and cut it on. I already know what this is for. Cutting the water, on from the spigot. You already know what that's for. Cutting your TV on with your remote control. I already know what that's for. That's what happens once you get used to this stuff in the repetitious mode to know exactly the use case of these different little apparatuses, right? The mechanics of markets, right? The mechanics of markets relies on the technicals, right? The technology behind it that makes it what it is, right? Technical analysis. The mechanics of the market is always relegated to the technical analysis. Let that marinate for a moment. So yeah, by trade, you are all the technicians. Y'all are technicians, right? Charting technicians. We may not be a Carter's, what is that Carter's work over there at CNBC, but y'all could do darn good yourself by learning how to slow the markets down and do the same thing that y'all see I have done this S&P 500 chart right now. This is not outside you guys' wheelhouse and possibility realm here. Right? Again, it's all about slowing the noise down, deadening the noise, quieting the noise. Get everything out your ear, focus on what you're doing. You might need to trade in that energy or that space until you can learn to deal with all the distractions. Because y'all know I'm the first person to tell you, you got to drown out all the distractions, especially if you day trade. You got to drown out all the distractions in and around you so you can focus on, focus on your money. You're doing a bread to meat theory, right? Thesis, right? If I don't move my feet, I don't eat. You're trying to plot these support resistance. You're trying to make sure you got your zones, quartered off, right? Halved off, blocked off. However you do it, right? It's all synonymous, right? And it's not, again, to the extreme where you can't figure out exactly what we're doing. Again, block it off, right? Block it off, right? Make it make sense, block it off. Look, not hard, guys, not hard, not. $half, whole dollar integers, half mark hashes, and then again, give me a peak to trough, give me a pseudo resistance and pseudo support, right? Give me a peak to trough, then let me go do my thing. Right? Like what all about the Benjamin, let me go do my thing. Give me my time, book them. Let me go do my thing, right? I'm ready to go do my time, right? I know what's coming, right? This is the markets. Again, technical analysis is superb. Look, this is where this is where the money is made, because it teaches you how to respect price action. It teaches you how to respect price action. Buyers and sellers, and different time zones of the market where people might be fast driving or slow driving. That happens. We know the markets get slower at around lunchtime, because most of the people go off to lunch at the pit Wall Street, so the markets are more controlled by algos at the point. That's why markets always typically climb during the lunch hour of the markets. Typically it'll climb unless we're in a very bearish sentiment market, and it'll just kind of slowly bleed out. But typically, if we're not, the market's always going to typically climb around about that 11:45 near 12 into around about a little after 1. Going into 2. Don't ask me why, but I know why. But y'all should know why too. That's algos. That's human, emotion kind of out of the equation, and the market's kind of on autopilot, low volume melt ups, and it happens. All right, let me see this. Let me remove all my Scrabble off the screen right here. And let's see if we can test that really quick here, right? On GP. But again, this ain't none of that. A lot of people don't know anyway, right? Okay, 11:30, right? I said about 11:45, 11 near 12, right? Into around a little after 1, right? What do y'all see right here? Let me blow that up. Let me blow that up real quick right there. Let me blow that up. Blow it up. All right, blow it up, right? So let's go right here. All right, trying to blow it up a little bit more. I know I should be going to Trader View right now. I don't know why I'm tripping. All right, but I'm gonna use this small chart for a reason. I just want to use this from a small. I want people to squint a little bit. Hey, I want y'all to see this here. All right, so right here is the 12 o'clock hour, right? That's 12 o'clock. You see on the screen, cross axis, crosshair there, 12 o'clock. From 12 o'clock all the way to literally 1 o'clock, a whole hour, the market went straight up in a clean methodical pump. It was the most cleanest move on the chart all day, besides this sell-off at the back end of the day, right? Look at this move here. That's algos. Again, this is a part of technical analysis. See right here? Now this ain't gonna be straight. Let me clean that line up. I know I'm trying to be a perfectionist, not even really warranted. But I want y'all to see it for what it is, right? So let's see. Let me see if I can get this kind of clean. All right, it ain't gonna be clean, but y'all get it. That's methodical buying. That's algos. That's programmed to buy, maybe on 3-cent increment lots, 4-cent increment lots, or 5-cent increment lots anytime you have an extension up or down towards a point or a pivot. And what ends up happening in that is that, again, that's what also other people, retail in there too, of course, but they can't really control, again, billions of dollars, on autopilot, right? On autopilot, literally trade the market up again. And that's exactly what happened. So that was an easy, well, it happens a lot more than you think too. So I'm not going to, undermine the fact that I say easy there, because typically I use the words easy, because I want people to realize this you got to plot this stuff right. So literally from 467.70 all the way to 469.05 or 469, the market gave you a easy route to get you a whole $1.30. Because that's lunch hour of the market. Algo's a program, high frequency bots, all that stuff is programmed. They bots doing remote control trading while they're away. Look at the volume down here. I'm not making this up. Low volume. It was low volume and all that. Wasn't none
tell them over.
Go ahead.
I was gonna say, tell them over. They better watch that documentary you put up about the quants and how they operate.
High frequency quants, exactly right. Well, I mean, we need to revisit. I keep saying we need to revisit some of the old work. We're gonna do that going into the holiday season when more people kind of home and comfortable anyway. That'll be a good time to kind of bring some of them old ones out. When people ain't got anything to do throughout the day, we just fire one of them up, right? So yeah, we're gonna get some of them back in. But that's exactly what's happening here. Again, a whole $1.30 in that moment. So again, your option trader, you playing from the mean line, right? Right. The deviation at that point, 468, we use that as the mean line. Look, that's your whole dollar move in that moment, and that happening within a whole 1 hour of the trading. A 1 hour block worth of trading. See, these are the little secrets, right, of Wall Street. Now, I'm not gonna say it happens all the time, but it happens a lot, right? That's a whole dollar. Well, in this case, a whole $1.30, right? I don't want to, all that change matter too, right? Give me all that change. That's a whole $1.30. In that, again, quantitative move, right? Using that term, that was a quantitative move there. From 12 to 1. Lunch out of the market, clean move, $1.30. From base case all the way to peak point or resistance right there. $1.30. So if you one of the people that got big money, let's say you had 10 racks, right? Well, how many shares can you get? If you're just buying shares and not buying options, of course, you're about that life. You got a ticket at $467, $467, or let's say $468. How many shares can you get, with out of 10,000 at 480 or 468, a ticket? And you can be planning for $1 move right now, right? Guess what? That's money made. That's money made in that moment, in that perspective. And you have a clear, obviously, stop loss, right? You have a clear, obviously stop loss, and Algo's got you on their back. Get on my back, I got you, right? Right? Algo's like, get on my back, I got you. I'm gonna take you all the way to potential resistance, and that's what the market did. It took you all the way to that same resistance we already established early in the market that day, early in the beginning of the market, because that was the clearest resistance that we got from the high of the day, intraday, and they all did went back to it again, and what? Showed itself to be approved there, got weakness, got pulled back, tried to break it again here. There's your triple top, obviously in this case, and then guess what? Triple top definitely make them drop, right? And there's your downtrend. If I'm seeing a triple or a double top on the back end of the day and there's no really surprising news to catapult the markets higher, and I know it's already playing from a place of defense and weakness from off the previous day high of that's higher, obviously, guess what I'm doing? I'm looking to buy puts. I'm looking to buy puts. I can literally show y'all in one of my little trades I took. I literally took it right after this time frame here at the hidden resistance 469. I was waiting for it again. I waited all day. I waited to add more. I'm saving that bacon. I was saving that bacon. I was saving it. And as soon as I saw it hit that resistance, I'm in. I did it on the back end of the day on a case study. Matter of fact, I posted it in the Facebook group. That y'all seen it in there? $30. It called what? Yeah, it was $30. I did it on the case study. Right, I bought in a couple accounts. Well, just one in my TD Ameritrade, Tasteworks and TD Ameritrade. I said I'm going to show people just real quick. $30. It cost me $30. I played into that downtrend, breaking the trend. I want to see if we could break the mean line, which is 468. After that, I want to see if we can kind of roll out into that, because now I'm still thinking about people thinking about tomorrow, Friday, payday, Fed day, right? CPI data day. I'm putting all that stuff in the mix. Now, it's not so much just technical alone, even though that's a technical play because I'm playing out the resistance. I'm also playing into the investor sentiment that the Feds, got everybody a little nervous about the CPI data that they feel like, this is the moment where they're going to taper. So I'm planning all that. I'm using all that against the market. But from a base case, This was a technical trade. Why? Because I know that was the resistance. And I know we've already had a support established at 467. We already had that established too. I got a mean line reversion of 468. That's the middle, the gun line. If nothing else, I got $1 down. And in particular, I can get another $1 down to the base level of support. If we don't break that, that's fine. Take profit there. If we break that, okay, that's even more. And that's basically what happened. It broke down below that resistance of 467. That gave me what? We finna go lower. Now we're gonna have a bounce at some point because the markets have to. Why? Because we hit what? Oversold on the RSI. All right, oversold. We know what oversold means, right? Anytime we move below that 30 on the RSI, right? In intraday action, that means you exhausted all the sellers in that moment. You should have a small bounce or retrace at some point, especially in a ticket like the S&P, right? We're not talking about a garbage company that failed the FDA approval or something, and they can just keep bleeding, right? They have an RSI of 2, right? And still be trying to sell off, right? But this is the S&P, right? So this is the understanding that, okay, we're finna get a little bounce at some point, but guess what? If we don't break it back above, in my opinion, that 468 mean line reversion, I'm staying short. Why would I sell? These contracts don't expire to the market tomorrow anyway, because they're not, intraday expiring contracts. So I got them to hold to tomorrow, and I'm planning for more downside at that point because we already broke through support. Clear as day, we came all the way down to 466. So that little $30 that I spent ended up turning into like what? It was like 50, 60 some odd dollars in profit. No, it was more than that. It was like near 70 something at the peak. So basically $30 was like, end up being like about $100, right? Cost a little $60, $70 in profit that I made off that trade.
I do.
See, when y'all hear me say that, right? It's a little piece of change, right? For a little something strange, right? Give me a little piece of change, a little piece of change for a little something strange. That's the whole mentality behind that. That's option trading, of course. That's using a little bit to gain a lot, to get a lot, potential value in that. But they're showing you how you can double up $30. I tripled up that $30 basically. Dang near. Couldn't make this stuff up. Playing strictly off the rules of engagement. So that's what I'm talking about as far as using your technicals to give you a better picture of why you need to be looking at the markets and being honest with yourself, right? And knowing how to, really plot these zones so you don't kind of get caught into somebody else's, ranting and raving. No, this right here, bro. This right here, right? And somebody else like, no, I'm right here, bro. No, you got to be able to do this on your own. You have to be able to do this on your own. Right? So that's why we go hard at keeping this stuff basic as possible, speaking in layman terms best as possible, and showing you exactly how literally the market is not as complicated as one would have you to believe from the onset. It feels that when you don't have a whole lot of money because you're like, I got to make a lot of money with a little bit. See, that's the wrong approach. You got to get used to getting on base, right? Base hits will win the games, right? Get on base, get the little $3 games, figure out how to get the little $5 gains every now and then, get the little $10 gains every now and then, and then eventually you can graduate. Right, all you're doing is increasing your lot size at that point. Lot size gives you the bigger opportunity to get bigger bang for your buck. And one way to do that, of course, if you understand how to do this properly, is option trading. But you learn how to know what to do first. You just can't jump out there and start trading options like, okay, I got it. That's not how this stuff works. So again, we've shown that time and time again when we do the little case study, we show you how to take $5. We've turned 5 into 250, 300. We've turned 25 into hundreds. Again, look, some of it is one-off events, some of it is calculative value. But overall, we had our directional bias right. That's the part I want y'all to realize. You want to make sure you get your directional bias right. That gives you a chance to fight. That gives you the opportunity to get expansion, which obviously makes money. Right? Somebody mic. Okay, yeah, I think it's brother Paris. 1 second, brother, mute. Right. So that's how you get it. You plan for expansion, right? That's the name of the game. Expansion is another fancy way of saying you need volatility. Volatility gets the money. Volatility, expansion. When things trade tight, it's hard to squeak money out of that. When things are moving and people are motioning and stop loss being rated, stocks are moving and expanding, that's where you make your money. And I'm speaking strictly to the day trader at this point, not the investor. But guess what? Even the investor make money in that moment too. Why? Because if they dollar cost averaging, or they playing in the strength, or they in the weakness, however, they get a chance to kind of add fuel to the fires in those moments, to their long-term hold thesis. Right? So that's why I tell people, man, look, this thing can go either way, right? Opportunity, look, it's all about how you're able to plot it in the markets. It's always there. I repeat, opportunity is always there in equity markets, always there. Meaning when you wake up in the morning, somebody gonna make some money that day and somebody gonna lose some money that day. If I'm lying, I'm flying. It's as simple as that. Someone's gonna make money, someone's gonna lose money. That's guaranteed. That means by the very default value of that means it's guaranteed opportunity. Guaranteed. It's guaranteed. Guaranteed. Right? So in the midst of all that, you got to dumb this stuff down. Right? You got to dumb it down. So that's the importance of being controlled in your thoughts, not chasing, not trying to prove that you Hollywood code, right? You ain't no punk. Markets don't care about all that. It can soon take $1 million from you the same way it'll take $10 from a person that only got 10. Markets don't care. Markets do not care. Ain't no do-over. Ain't no, man, let me get that, that million back, bro. I just messed up, with my entry real quick. My bad. Let me try that again. No, you don't get do-overs in the markets. Unless you come back better prepared the second time than you did the first time. Basically, that's your do-over. Go back and get that, that what you messed up and gave away, previously, because you was, jaded and chasing, waterfalls and not supposed to chasing the reality of what markets are really designed to do. So that's why you got to go back to your basics. Never omit the basics. Knowledge brings power. Power equals profit. Technical analysis is the gateway to becoming more proficient in markets. Why? Because it teaches you, again, about how to establish price action, right? It teaches you how to establish price action. Once that is known, right? I'm sorry, guys, I had a quick little message. I want to make sure I get this here. Once that is known, then, it's game on. It's game on, right? So that's why you can't skip it. That's why it's in your best interest not to skip it, right? So we're not going to be confused, right? And you're going to practice on this. You want to practice on this. You want to go to YouTube and query anything on technical analysis, technical analysis 101, the basis of technical analysis. You just need a bombardment of what? Information, data, consensus being in your earways, permeate your brain cells until it began to kind of set in your psyche, right? This is training wheels 101. Look, you can't jump out there without training wheels out the gate. You can get lucky, but consistency is the matter, right? You need to be able to establish your balance in this, right? You need to establish your balance. So you got to be able to kind of go into these spaces and learn in a way where you feel like, okay, you're not wasting your time. So I always tell people this is the best time well spent, and when you learn how to increase or perfect your craft. Why? Because show me a plumber that's not certified, right? That's going to go up on the, $1 million plus, 2 million, 5 million, $10 million house and perform a service, and then think he's going to come out of there victorious. Now, this is a skill set that's needed. Number one, the world can't live without plumbers, right? Cannot. But you ain't gonna have anybody under your pipes like that, right? You need to take the same approach when it comes to your money in these markets. It's the same energy. It's the same energy. But guess what? See, this right here don't cost you any money to learn. That is, right? You can get some one-on-one consultation or some mentorship. Obviously, the way I do mine is so basic. It's $1 a day. Bakes down on 30 days. That's $30 basically a month. So that way you can't say I'm trying to get all your money. I ain't. $1 a day. If you got $1 to learn, guess what? Let's go. Because now it's about building. In my opinion, I think it's more about building a community where you can establish a good think tank of people that you can, trust and that got your back. Because guess what? This is not, a competition. That's what I love about the market. It excommunicates the ideal of a person that want to come in and be competitive, because I'm not trading against you. I'm trading against the market, right? I'm trading against the algos, the high frequency, algos, the quants. I'm trading against market makers and banks and hedge funds and that kind of energy. You see how that works? It's not personal. So therefore, I want a team of other people who think and move like me. I want to, again, form Voltron, right? Or the Power Ranger one, whatever that is. I'm trying to find those kind of people who are hungry and serious about getting this bread. Why? Because look, if it's 5.6, 5.7, or $6 trillion moved around the world daily in global transactions, and a great majority of that is obviously coming through the equity markets alone, I asked the person a very simple question, just like that commercial, what's in your wallet, right? How much of that is going into your wallet? That's free global market money that's accessible, opportunistically given to you in the terms of what you can engage it, not based upon your credit history, your race, your gender, your sex, your creed, your beliefs. None of that stuff matters here. If you got criminal record, if you don't, you got baby mothers if you don't. Look, none of that stuff matters over here. If you can open a brokerage account, which you can do much faster than you can do a bank account, then guess what? Let's play ball. And that's what you can. You don't even need to have a bank account to open a brokerage account. Why? You can go right to Walmart, CVS, Walgreens, get a green dot, right? Do what they call them green dot card, the prepaid debit card. And guess what? It's already linked to what? Stash. It's linked to Cash App. All the little financial technology companies now give you access to be able to invest in the stock market and crypto. So you don't even need to have a bank account like that. They give you one already out the gate just by going to them, and you can put money onto it, cash, right onto it at your local Walmart, CVS, and keep funding it and keep having access to trade the market. And then eventually you can use that bank account, which they're going to give you an ABA routing number and account number, to fund big accounts like what? TD Ameritrade, right? E-Trade, Charles Schwab, Interactive Brokers, Tastywork, whomever. That account now can feed those other accounts. And you don't have to go to Wells Fargo and go through all that old damn foolishness, or Bank of America, or Chase, or whoever. See how that works? Most people like, that's giving people the game. No, that's giving people common sense. The game supposed to be common sense anyway. That's how I was schooled coming up. Game is common sense. It ain't all this extra verbose gaudiness, right? It's common sense. You got to meet people where they are. You can't wow people and then just falling for you. Some people fall for, but not everybody, right? Fool me once, shame on what? On you. Fool me twice, shame on me. Look, rarely you're going to get me twice. Rarely. Right? So that's the mindset I want you guys to play from, because you're trying to learn something here where you're going to have people come at you saying, no, you just doing this, you're doing that. You don't know what you're doing. You're gambling. You come over here. Let me teach you this better, because this person ain't giving you nothing that you need. You're going to get that. If people come at you like that anyway, they already got bad intention. Why? Because, see, again, this is not about competition. This is about teaching people how to be proficient and learning how to deal with their own emotional issues and psychological disposition, and figure out how to be able to be more controlled and dealing with learning how to map out and measure money. The same way we do a technical analysis on the chart, all I'm doing is mapping out and measuring the money. And I'm trying to figure out how much it's going to cost me to be able to, to engage this opportunity. It don't care about what somebody wearing over in the next cubicle beside me today, or what kind of cologne somebody might be wearing that bit. All that stuff don't matter here. What you did it last night, at the trap house, that stuff don't matter over here. Whole different ballgame. Equal playing field is my point. It's an equal playing field, even though we know the markets are crazy and seem to be manipulated, right? To a degree, right? Hold up, I'm sorry. One second, I'm trying to get my dinner order at the same time. Forgive me. So, but again, as long as you keep that in mind, you'll understand exactly, again, how important it is to stay with the basics, right? Right? How to stay with the basics, right? And that way you won't be confused when you see things pop up. You're like, okay, well, what's this? Right? What's this? Right? No hesitation there. Right? At all. Right? So again, that's rules of engagement. The same way we just talk about, high deal, again, support resistance, SP 500, 467 resistance. That's the new resistance we broke below it. Guess what? After our futures market, right there, I don't make the rules of engagement. I'm just playing by it until they can break that comfortably and close above that 5-minute candle and turn it. Guess what? That's a downtrend back down to the mean reversion, right? Back where it came from. We got a baseline of 466. We got a half mark of 466.50, right? 466.50 here, right? And that's your what? Your plus minus 50 cent up, 50 cent down. Play ball. Right? Again, rules of engagement. Right? So, and saying a whole lot and work from this very tiny screen today. I'm using this very tiny screen purposely, right? I'm not going to use the big old Cadillac, right? I'm not going to pull out the Rari, right? The Bugatti screen, the trading view. I want to use this one because, again, I want you guys to home in on exactly what it takes to be very, skillful in your eye-hand coordination and let me say it the way, hand, eye, and brain coordination. All three. Hand on the click on the mouse, right? If you trading like that on the keyboard, eye, being able to see what's going on in real time in the market, right? Guideline, grid line, put your eyes in that percentage where you can put the markets in, dumb it down. And then your brain, because your brain is already calculating exactly all the variables, what to do, what not to do. And then that's going to keep your emotions in check best as possible if you're moving under the idea that, look, I'm working as a tactician here, a technician that knows what he's doing, a tactician, technician, all that. Right? This ain't about, again, y'all get it. Right? Again, you're dealing with humans, but you're not interacting with those humans, imana and mana, right? You're just dealing with their money, right? It's your money competing against other people's money in the markets, literally. That's all it is. So I use analogous like what? You sending your money out the war, right? Do you send your money out the war with one boot, half a bullet round, no Kevlar vest, right? Some biker shorts on, long sleeve on in the summer. You ain't sending your money out the war like that, unprepared. Look, but that's what happens when you jump out there and you're not prepared. You're not gonna win that battle, right? Right? You're not gonna win that battle. So it's important. It's important to realize this again, the strength of why the minutia of this matters in a way where this stuff is not outside you guys' pay grade. It is not outside your pay grade. You can learn this. You can be proficient in this. You can be solid in this. Very solid. Right? Very solid. Again, take the training wheels off this, entire market today, and you clearly can see what's going on. Take the training wheels off, all the guidelines, grid lines, you see what's going on. From a technical perspective, your eyes are locking in and you're looking at what? Pivot points, meaning Barry Sanders moments, right? Where my Barry Sanders people out from the Detroit line, old school Barry Sanders, right? Some of y'all probably don't know about the late, great Barry Sanders. He's still alive, cool, but Barry Sanders, one of the, matter of fact, what are the people that play, Madden, all the football games back in the day? Right? What were people that played them old school Madden games? Right? Barry Sanders had breaking ankles, right? Pivot on a dime. That's where everybody get that from, Barry Sanders. Right? Allen Iverson, all them that break you off. Look, you learn how to read pivots, hard pivots in markets because they give you what they call very, 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 very lucid, jagged, peak, or I said peak to trough moments, right? And they give you hard moves in the market. You get a straight line up, which is parallel, which that's inorganic in market. Anytime you get a straight line up like that, and it's bigger than the average candles that you typically get, that's what you call an inorganic move, right? They call them parabolic moves, whatever, right? When your line is more of a 45-degree angle, that's more of an organic move, right? That's more of an organic move. Make sense? Right? So parabolic moves that go straight up and straight line, linear like that, 90-degree angles, inorganic. They're typically going to be followed up by either another try to, push the limit candle, but right after that, you better expect you're going to have a pullback candle coming right beside that, either subsequently right after that or the next candle or two after that, unless it's going straight parabolic. Those are what they call hard pivots, right? Hard pivot points in the market to be able to basically search and destroy those moments, right? Those are easy moments to plot out to be able to get paid off them when they happen. Either into your resistance or into your support. All right. If I, say, well, spot the heavy, the hard pivots in this chart today, instantly y'all eyes are going to look at this chart and lock in exactly where the hard pivot points on this chart today. Matter of fact, really quick, anybody that's on the panel right now that's in the training here, somebody give me the hard pivot points on this chart right now, really quick. Somebody give me the hard pivot points that can open up their mic. Either can speak it verbally or you can write on the chart yourself. Give me those hard pivot points right away. Give me those hard pivot points on the chart right now. Anybody on the panel right now that can talk or draw, right? And you can follow along on the YouTube side. Guys, write it in the back chat, right? Give me those hard pivot points that you see on this chart right now, right? Somebody already starting to write. Let me see. We got a hard pivot point. Okay, we got one right here, right? We got one right here, right? So we got one right here. All right, somebody got one right here, right? All right, so we got two already, right? All right, we got one right here. There we go. See, there we go. Got one right here, right? Right? All right. Give me all the hard pivot points, right? All right. We got one right here. There we go. All right. There's another one right there, right? Somebody give me another one, right? Give me all that you see on here in terms of intraday. Give me all the hard pivot points. All the hard pivot points today. All right. There we go. Over David. All right. Got me at the very peak, right? Yep. That one, they're definitely definitive. Why? Because it's really deep on what I just talked about. That an organic move, an organic candle, right? Over Shavers in the back, check on the YouTube. He got it 466, right? Hard pivots, right? Over Brandon got the pivot points. A lot of here over David. Those are hard pivot points. Inorganic hard pivot points based upon what we just talked about. Inorganic moves, straight line linear candles that exceed that of again, the SPY definitely known for them, but exceed that of a normal pattern that you would get inside of a trading perspective when it was kind of trading tight candles, and all of a sudden you get a big long candle out, bearish engulfing or bullish engulfing, and it's longer than the average smaller, baseline 5-minute tick candles that may give you what 10 cents increments, 7 cents increments on a spread. You got one that just gave you a whole 80 cents or $1 move. That's inorganic. If it's not followed by other ones to kind of keep it parabolic, eventually what's going to happen is it's going to roll over after that. Meaning it's going to reverse at my point. These are what you call reversal pivot points. Essentially, that's all they are, reversal pivot points. Your eyes are not deceiving you when you see all that stuff happen like that. You're like, oh man, this is going to be short-lived. Unless they're finna run it parabolic, it's finna be short-lived. That's the first thing you start telling yourself. That's the first thing you start telling yourself. It's going to be short-lived. Make sense? So instantly, if it's running into a founded place of resistance that we've already previously charted, what should you be doing in that moment? If it's running into a hard line resistance point that was already charted, what should you be doing in that into that hard pivot point? Anybody? What should you be doing? Anybody? What should you be doing in that moment?
Try to find the next play for support.
Well, keep in mind, in this case, we talk about the resistance. So the very one at the top where David put up there, If you're running into a hard pivot point reversal or a hard pivot point where you have parabolic straight up candles into a place where you know there's a point of resistance that was already mapped out, what should you be thinking about doing into that resistance point? If you've yet to get into the market or if you're already in the market at a low point of support?
Either taking profit or getting ready to get in.
But at that, there ain't nothing else to do, right? You've been able to map out, you know, what they call a peak point of profitability, right? That's your peak point of profitability, right? Tongue twister, right? Period. Either you taking profit into that, right? Or scaling out if you think it's going to pop and go high, but at that point, you definitely take profit. Or you get ready to do what? Buy you some puts or play a reversal. Because guess what? You've already established the peak point of what? Risk. You've already defined the risk because we know that's already what? A point of resistance that we hit earlier or a point of support if it was at the baseline. That's discipline. That's how you make money in this stuff, guys. That's discipline. It's hard to do in real time with your emotions and your money, but if you learn how to slow all that other stuff down, the distractions that come along with having to deal with money and learning how to be indifferent to money because money is a resource and a tool, and realize that take care of that, right? That's the other acronym. Y'all know about FOMO, right? FOMO. Do y'all know about the word phone? FOLM. We talked about it before, but it's been a minute. Anybody know what the phone acronym means? FOLM.
Fear of losing money.
Come through, Oba, right? Fear of losing money. When you get that from behind you, or you get that behind you, you'll be more confident in being able to make these kind of investments or trades based upon, again, the rules of engagement. You coming into the market to make money. You're not coming in to try to play this game of what I'm trying to, if you do that through investing. If you're trading, this is, risk on. This is a risk on moment. You're not parsing straws and parsing heads. Like, I don't know if you're not that confident, guess what you should have never did? Never should hit that buy button. Matter of fact, don't hit the buy button. As they say, it's the best trade is the one not taken. If you uncertain, unsure, not decisive, don't take the trade. Why risk it? Again, if your thesis or your setup is not there, where you can account for it, don't risk it. Don't take it. There'll be others. The market ain't going nowhere. As we say, it's a marathon, not a sprint. It's hard to take an L mentally and psychologically when you're waiting on the pivot. You're just waiting on a moment and you miss it for some odd reason. Look, it ain't in the world. The best thing happening to you is that you still got all your money in your pocket. All your money still in your wallet or in your brokerage account, waiting for the next one. I know it sucks mentally because it's going to wear you like, man, I could have made some money, especially if the stock end up making the move that you wanted to make, right? And unfolds the way you want it to. You sitting there counting the money. It happens. It happens to the best of us. It happens to the best of us. I'll be the first one to tell you that happened to me the other day, right? With DocuSign. I mapped it out. I was waiting for a big move to happen. I already knew it was going to get hit because it was a stay-at-home COVID play. How about I got busy right when I was getting ready to make my play on it, and I got caught up in a phone call, and I didn't have the limit order on. I was going to make a hard move. I was just waiting, being, me, trying to be a little extra. And I got caught in a phone call. I didn't get a chance to place my trade before the bell. After when they released the earnings, the stock plummets. Y'all saw DocuSign. I ain't got to talk about it. I was sick, but I kept a straight face. I came in the group. I was like, yeah, this is what happened with DocuSign. I kept a straight face because that was a little piece of change for a little something strange. That was a $63 move that I mapped out. I literally was going to buy like 5 contracts for $63 a piece. That's what I was playing out. I was mapping out the $60 strike what was it? What was strike price was? I had it mapped out. I showed it everybody in the group. I literally mapped out still $63. That's how much you're gonna call me. I was gonna buy 5 of the contracts. And those contracts the next day were worth like near $5,000. I'm just put it like there. So roughly a little over, $300 and change would have been worth essentially about $20,000 to $25,000. No, I want to go work with Miss Charlotte. Change my mind. No, I don't want to work with Miss Charlotte when I can have the opportunity right there. So I had to explain that to the family because we were talking about it and all that, but I kept a straight face about it. But I mapped it out. I was like, these the one I'm gonna look. I was looking for DocuSign. I was looking at what was the other one? It was another cloud play. It was a cloud play. I was looking at that. That was a crowd strike. I think it was a crowd strike that night too. I'm like, dude, you better than this. How you get caught up in a moment when you sitting there watching the clock, like this Kobe moment, right? The clock for Nick, bro, you up here slipping. It happens though. Yeah, you're gonna count the money and you're gonna feel like, okay, you're gonna feel some way about it, but that's okay. Sleep it off. It's all good. Look, you get it on the next one. It's all good, right? You can't get them all, right? Long as, again, you was right in your thesis, that's all that matters. Psychological victories also help in aiding in your confidence, right? It aids in your confidence. You may not get a move like that, right after the next deadline. That's okay. Again, that's the markets. Again, it's opportunistic for that very reason. You can't get them all. And if you're a person who's yet to realize and deal with that, you can guess what? See, that's why you got to work on that, because guess what? Money is always going to be available in this. It's going to be, frequented a lot by a lot of cash from all walks, institutional down to the retail trader. And at some point, again, you'll be able to still be in a position where you can, make you some gains or make you some profit in this. Because you should not hinge your entire career in this market on one trade. If you are doing it wrong. And you would never hear me tell you that your success is going to be defined by one good home run trade you make. Yeah, that one home run trade may be a defining value for your account, but that is not what you got to learn how to do the next day. Because again, you could be lucky, but can you be consistent? You're trying to learn how to do this on a consistent basis. So you can't skip the knowledge. Again, you cannot skip the homework, the charting hours you got to put in to learn these charts. Again, at least 10,000 charts, a minimum of 10,000 charts you got to go over. Minimum 10,000 chart setups. All that is doing is training your eyes, your optics to read patterns, trends, and things of that nature. The price action in the candles, the oscillators, the indicators, right? That's training your eyes to receive all that. So when you see it, you've seen it before, or you can parallel it to something in the future. Don't cheat yourself. Again, that's why it's called technical analysis, back to the basics. The fundamentals obviously kind of intertwined within that, but this is why this is important. Make sense? You guys with me there, right? It's important, right? Don't skip it, right? So again, using some of those basics, that way we don't be confused. Y'all know what's going on. This was a good way to do this right now, because I wanted people to see this in real time in a short-term perspective where you have to really look at, small intraday action, but a small chart too. Let your eyes get used to all these kind of, all these hard pivot points, because you see them more, rigidly when you look at a small chart anyway. The same way all you guys mapped out these pivot points on here, this is exactly what you're playing. Well, most algos are playing for throughout the day sometimes. And big people, hedge fund, market makers, banks, they're doing the same thing. Again, with millions and billions of dollars though. So you got to follow the money. When they make their pivots and you feel like they can do a hard reverse, guess what? You got to be ready to rock. Unless you got a long-term thesis mapped out for that asset in terms of the trend that it may be in, downtrend, uptrend, neutrality trend. You just take that, count it all at the Turk folks, count it all joy, and keep rocking. And keep rocking. Right? So that's why it's important. So again, I'm not going to beat a dead horse on that. I want to hammer these points and get off of them. So that way it sticks and lingers. Of course, you can go back and watch this video later. That's the whole purpose of that. But this is the extent of why these things are important and why it's important that you realize that now, because again, in volatile markets, it's hard sometimes to not chase when things are opening up and moving fast, but you still got to make sure you have your technical game analysis on point. I repeat, you have to have your technical analysis game on point. And if you're learning still, it's okay. You can paper trade. You can follow along in real time, do natural eye observation, train your eyes to be able to see this stuff, get used to learning all the old patterns again that you kind of learned at some point, put them on the shelf. They got dust to pick them out again, learn those patterns. What's double top, triple top? What's this? What's it? The different candles, shooting star, evening star, 3 black crows, three right soldiers, Marabuza, inverted hammer, dragonfly doji. Learn that stuff. Brush up on that stuff. It don't make you less than because you went back and you learned some basic. That's what make every sharp trader consistent. We want to be proficient in those things. Unlike most people, right? They don't want to practice. They want to, man, I got natural skills. I got natural ability, but I don't need to practice these pivot points and all right, this play, all right, whatever, right? Now, in this, we want to be proficient in those things. You want to be proficient in them, right? Because it's going to save you a lot of money in the back end. Trust me. Look, hard head make a soft wallet in the stock market. That's an old saying. A hard head makes a very soft wallet in the stock market. Don't do it. Don't do it. It's not worth it. Study to show that self-approved, not to anybody else, but to yourself, because this is you against the markets. It's you against the markets. Right? So, once we got that down pat, we're good to go. So again, short term, long term, it's all the same. No matter how you look at it, again, you're seeking, right? You're searching for opportunity based upon, again, rules of engagement, right? Based upon rules of engagement. So again, baseline technical analysis, short term, it's a lot of this stuff is very simple, right? The principal difference between day trading and other forms of trading is time frame. We know that. We just talked about that. 5 minute, of course, if you're doing a 5 minute window, especially on a daily chart, if you're doing within intraday daily scenario, the pivot points, just trying to figure out, how do I frame my mindset to deal with this market, right? Technical analysis assumes that the price moves in trends, right? Again, we just talked about that, right? It's trying to play into these pivot points. It's trying to play into these sellers. It's trying to play into these buyers, right? The market makers are trying to direct the market where the money's at. If you're waiting to get into the market, you got a big order down here and the market's close to that point, and they got somebody that still want to get picked up a little higher to sell, that bigger order probably get higher precedence over your little bit amount that you're trying to sell, and they want to get that guy into the game because that's potential money that the market maker can make off this guy. Right? It's trying to move towards those aspects, those price action trends, and within the trends itself, double bottom, triple bottom, this, that, and third, head and shoulder, inverse, head and shoulder, cup and bottom, handles. It's trying to do all that. All that know what's happening in real time, and the market is trying to, and that's why they end up making that move throughout the day. It seems like it's all over the place, but no, it's not. You look at it when the whole day is over, it's a very defined value. Pivot points, break out or break down or go neutral, and that's it. Not rocket science, right? Trends have the tendency to what? Perpetuate, excuse me, right? Trends have the tendency to perpetuate. So basically, it's trying to give you, again, defined values, right? It's trying to give you defined values, right? Look for weight, right? Look for the weight of evidence, several indicators to indicate a reversal. So there's many different things you can use. You could use, again, reversal signals. You can use oscillators, right? Oversold, overbought, MACD, right? Stochastics, right? Squeeze momentum oscillators. You can use indicators, right? Bollinger Bands, right? Peak points, Helsinki, Inkamoku clouds, right? All this stuff, you can use these things, denoting the value of what? Trying to figure out where those reversal moments coming. Or the candles, hangmans, right? Evening star, right? Again, dragonfly dojis, right? When you had succession of candles that might have been one color, they might change and go the other side. Now, it's all relevant, right? In technical analysis, we are dealing in probabilities, never certainties. Very important there, right? We talked about that, right? Probability bell curves, right? Right? The stance that, you're trying to establish who's going to be the supremacy, dealers in this moment, right? The buyers or the sellers, right? Tug of war game, right? That's what it's trying to figure out, right? It's all variable nature until you have that level of what? directional bias starting to what? Overtake one side. Or more people selling more than they buying, or people buying more than they're selling. Once that's somewhat established to a degree, you can kind of play within that field of reference. Make sense? That's the markets, right? So, and these are just some diagrams of different aspects of, I just want to hit some of those principles, right? Terms about indicators, right? Peak to trough, we just discussed that. The importance of peak to trough pivots are very vital. This is you establishing support and resistance. No more, no less. All right, until those blocks change, those areas change, that area of opportunity, that kill box changes, until that changes, you play ball inside of it. Give me the extreme low, give me the extreme high, let me play into those pivot points. Peak to trough, peak to trough, trough to peak, trough to peak. However you want to rhyme it. Not rocket science, right? Rising peaks, right? Troughs is bullish, right? Course coming off what? Pivot points where you kind of, like we talked about earlier, pivot points. Clearly, when you see pivot points being established, even in the uptrend, because you can play into it consistently, right? And you still feel like, dang, the market's still in uptrend. But guess what? You can short markets inside of uptrends. Yeah. It's called, again, peak to trough, right? It's called peak to trough, right? The closer it get to the top of a moving average or farther away from moving average, the moving average act like magnets. It's going to try to pull it back down towards it. That mean line reversion, that deviation point. And it just wash, rinse, repeat, right? It's just wash, rinse, repeat. And the market's still in a what? In an overall, it's still in an overall uptrend. Ain't that something? Look at science. Won't he do it? Inside joke. Won't he do it? Look at physics. Look at geometry. Won't he do it? Not rocket science. Peak to trough. Rising peaks and troughs is bullish. Of course, again, playing out the pivot point. All this is in the uptrend. We know how we establish an uptrend. How do we establish an uptrend? We say this till we blue in the face, because I want people to really get used to saying this. How do you establish an uptrend again? By its what? It should be almost like textbook now. Just like, all right, we already know, brother. How do you establish an uptrend? Anybody?
It's higher, higher.
Hold up. It's by its what? How do you establish an uptrend? Uptrends are established by its higher what?
Higher lows.
Higher lows, right? Those higher lows, because it's a game of what at that point? It's a game of what? Support. Hold the line, right? Hold the line back there, right? Hold up, bro. You hold the line. Like, bro, I'm out of here. I made my money. Higher lows, right? Higher low, higher low, higher low, higher low. It's the stair step pattern. It's the what? Climbing the wall of word, right? The stairway to heaven. They call it the stairway to heaven. They call all kind of stuff, right? You listen around some of the old school charting people, and man, they take you way back. Climbing, that's what you're doing. You climb it, right? You just like you remember the old toy back then called a slinky. Like you remember the old toy back then called a slinky.
Okay.
Y'all remember the slinky game?
So when you establish the higher lows, you go from the bottom, from the stair step, and it's the opposite on the lower highs. Is that right?
Right, on the way back down. Correct.
Okay.
So there's your slinky. Bam. Bam. Right? Y'all remember the old school slinky game, right? It's the same thing. So when it reverses, you're playing the same pivot point on the way back down. That's your uptrend. And then your downtrend is going to be, again, it's the same perspective, right? Downtrend, obviously going to be determined by, and that's why we keep repeating it for a reason. That's why we keep going over it, because you want that to sink into your psyche. You really want this to sink into your psyche. Why? Because from an optics perspective, when you see this on a chart, you can clearly come in without any indicator, any oscillator, and see it directly playing out from the optics alone. And you'll know what's going on. Oh, this is a downtrend. Oh, this is an uptrend. But before you even touch that chart, you look at it like, oh, this is a clear downtrend. This is a clear uptrend. I see the lower highs. I see the higher lows. You're establishing supremacy right there. See who got supremacy of the chart. That point, either bulls or the bears got it. You already know what's going on. Okay, let's go. Right. So again, this rising peak to trough. That's why I keep using those terms for a reason. It's just to kind of get your mind in a frame of reference where you can kind of already see a very dumbed down picture of what's going on when you hear those terminology. Oh, the peak, is getting ready to hit resistance, is up in there, some resistance, supply zone is getting ready to roll over. Apparently, that's the base case for rollover is high probability that is very high, like 90+ percentile. It can go higher, but it's close to rolling over at this point. Oh, it's down here at support. Oh, it's at the demand zone. Is at the RSI low. Oh, we got to get a bounce at some point here, right? So you have very risk, a very good risk management value, already in play at that moment once you see those things, either up or down, right? Either or. All right. So just obviously base case, right? Base case value, right? So rally fails to make a what? New high, right? That's when they start to what? Straighten out. Clearly, y'all see what's going on there. It's straightening out at this point, right? You don't have those big old what? Ebb and flows, right? And big old ebb and flow moments like that where the moving average act like magnet, right? This is your moving average here, right? It's acting like magnet, trying to pull that thing closer to it, right? It got away from it. The further it got away from it, the more it tried to pull it back down towards it. Here, it failed to even make a new high. It just kind of got blocked out, chopped off at the knees, right? That's one would say, right? You got chopped them off at the knees, right? You got him here, right? That's a fail high, right? Clearly a fail high. That begins to denotate the value of either the bullish pennant, right? A flag or a potential what? Rollover altogether. Because now you hit a what? Supply zone, right? Or what they call an exhaustion of buyers. All the money went in, right? Money all the way up, money, right? Money, right? Triple money here, double money and triple money here. All that money is starting to what? Thin out now. You ran out of, you had exhaustion of buyers, and you should get ready to roll over now. Now the rollover can be short, right? Back into the support point, or it could break that. And now you start saying, okay, if it break that point, now I got to start looking for that one. And then you do the same thing we just talked about earlier. You say, okay, well, these are support points on the way back down. If it doesn't hold and try to establish a new supremacy to go higher here, we say, okay, here's the latest support. That's the lower, the higher low. Here's the other higher low here. On the way back down, you do the same thing. Top, bottom, split it down the middle. There you go again. There's that highway again. That's that road, right? That's that hash marks in the middle of the road. And you do the same thing all over again. There's my top portion. There's my bottom portion. Let's go. And it's wash, rinse, repeat. Until it establishes a new support, a hard support, where you start the people see you bouncing. If it keep coming down and hit that one, if it break through it or not, who knows? But if it starts to pivot there, then maybe you round it off at that higher low and start trying to uptrend again. Either way, you still got to let it play out. But you already know the areas that you mapped out now to play into the money back to the downside if necessary, or how to play to protect the gains that you've already made. So you can set more proficient stop losses and not just be out there feeling like, I don't know where to put a stop loss. I'm just going to chance and then, no, plot them properly. Plot them properly and get paid. Getting paid. All right. So moving on, right? So again, keep that in mind, right? Guys, some of you guys already know, but we got to keep talking about it. Declining peaks, all right, and troughs now signal, right? Obviously, it failed, right, to make a new high. It did, just like we said, obviously start to kind of what? People start taking profit, right? They start, okay, marine the register, this move is over, right? Exhaustion of buyers, supply zone, all that. Rolling back down, the first area you're going to hit is that what? Again, that hard line, baseline, what? Higher low. See how it came down to that higher low? You see it right here? Here it was halfway. Here it was already defined. Come on down. Let's come get that higher low, right? Come down. Let's get that higher low. Bam. Got him. Right? Markers are not that, man. Shoo, boy, markers, they'll give you more signals than you can handle. You have to just understand how to read them and when to accept what they are and not fight against that. That one necessarily means it's going to be 100% right every single time. But again, you're playing in the game of probabilities. As the thing said earlier, it's a game of probabilities. Indicators are giving you, the extension of, higher probabilities or extension of that of lower probabilities. This is all risk management, discipline, understand the rules of engagement. Come on down. We blow through those previous higher lows, and now we back down to what? Where we took off from. Back tested that entire move. Back tested that entire move. That's what you call a real back test there, right? That's 100% back test, right? And anytime you have 100% back test from a mean line or version or standard deviation or whatever, right? A gun line, right? And it holds, right? Of course, that ain't a straight line, but y'all get my point. And it holds, that means that's signal for what? A new what? A new support. Because keep in mind, if you came from anywhere below here, in this point, this is your now new support, even though you feel like you could have been here, could have been here, could have been here. But the market was just playing into a parabolic move of excitement. At least it back tested and tested that point again, that's tested that point of support, and it held. That means you now have a new catapult to kind of play off of potential, but the probabilities are very high. Probability, dealing in probabilities. Now you can retrace and meander back up and probably test the highs or just come close to it and kind of play within that. You can still look, money here, money back down, right? Money here, money back down, and now money back into that move there, right? That's 3 monies, right? Just like, yeah, I make 3 monies, right? Yeah, you can make 2 or 3 monies in 5, 6 monies in a day in the markets if you trade, very crafty and methodical. All right, so that's that, right? So rising peaks and troughs, right? Now signal, right? Again, rising peaks and troughs, now signal. So again, it's establishing what I was just sitting there talking about. It's trying to play back towards what? Back towards the upside potential. Unless, again, now you got to break those old resistance points on the way back down, those lower highs. Again, we just talked about that, right? Lower highs, higher lows, right? Uptrends, downtrend. Once that's established, you plan back towards all those points again. So here, clearly, that's the lower high you got to break to continue back up to the upside. If that is not broken, then yeah, it could easily and then kind of come back down, test that support. If it don't hold it, it can break through it and go lower, right? Or affectionately known as a dead cat bounce at that point. But it ain't hard to establish it at that point because you've already established it, those moments on the way back down. That's the same way you established them, on the way back to the ups, on the way to the upside, and establishing the uptrend, the bullish momentum, right? Higher lows, right? Uptrends, right? Higher lows, right? Well, in this case, I got them wrong. Let me go scrub all them out. They're supposed to be underneath, right? But y'all get my point. Let me draw them right because I want to have them right. Right? Come on here, right? Higher lows. Higher lows, right? Higher lows. Once they are established, you know exactly how to play ball, right? You know exactly how to play ball, right? And it's going to be the opposite when you do the low high. It's going to be the peaks, right? Lower high, lower high, lower high, all the way back down. So either break that resistance here, or expect for it to roll back over, right? Or go sideways. But either way, that's resistance, short-term resistance at that point. Make sense? All right. So that's that with that. And so here you had a clear what you broke apparently. Price falls below breakout point, but rising peaks and troughs still intact. So guess what? You established a new one. It's just more tighter and refined. But again, you broke above it. You came back tested it, and you still, obviously held a higher point than you did off the support on this tighter higher low perspective to the upside. And now you're moving higher. You broke this resistance here, right? I guess I need to be drawing on the screen, right? You broke that resistance there off the those new higher lows in the shorter time frame. And now you're just kind of going back up and testing that some of the other peak points again. That's all bullish in this perspective. After you kind of had this bearish pullback, now you plan back into a whole nother bullish stream again. Not rocket science. Again, really isn't. Your optics are not lying to you. Meaning your eyes are not lying to you when you see those things happening, right? Here's another where it says a rising peak still intact, of course, and then you had a series of rising troughs no longer in force, right? In force. So at this point, again, establishing a rising trough is basically mean you just establishing a higher low. When that breaks, then becomes a problem where you finna have probably a succession of downtrends or at least some kind of form of a pullback. Not rocket science. Rising peaks and troughs now broken, close, clear. You can see that there. You kind of came off your high. You coming off your high. You plan back down to the downside, back testing the complete low, or you can test some of these higher lows on the way back down. Right. All right. In this case, this one here showing you when it made a new high, right? It bucked the trend. Well, at this point here, of course, in this candle, and this rising peak back here, it established lower, a higher low, lower than that of the previous one there did. But the bulls came back and reversed the hard and kept their supremacy. That happens sometimes. And they extended the market here, and you made a new high, right? See, it broke it here. It broke below that lower high, but it didn't break it below it enough to kind of be very demonstrative to the point where you lose this guy here, right? It stayed within that range, and then broke and made a new high. That happens a lot, especially in the SPY. This happens a lot. But the SPY, boy, that turned the SPY on you so quick, right? So what constitutes a legitimate peak or trough, right? As you see, 100% of the advanced move, and of course, in this case, establish that peak, pull back inside of that peak, right? Not always, not 100% retrace back to the downside. And then you kind of push and go higher, right? This stuff is not hard, right? Of course, y'all see this because your eyes are telling you basically you see what's going on here, right? Retracement should be about 1/3 to 2/3 of the previous move. See, there it is, right? It's telling you basically what it is, not even half. And sometimes they come down to test that half mark. That's why I do the markers in halves for that reason, because I think your eyes can read half marks a lot easier than thirds and 2/3. Now I'm trained to do thirds and 2/3 like anybody else, but I already know rules of engagement got people thinking about half and whole dollar marks, right? So half would be around about right here. Well, that's probably a little bit bigger, but y'all get my point, right? That halfway mark. But this thing is telling you to read it in thirds, right? Thirds or 2/3, right? Right, 2/3, of course, it would still be around about right here if it came down below that half mark, but yet still, that's still saying that you have a intact, you still got a higher low, right? You just bouncing, came back, tested, made a new higher low here, and then you went higher from there. Not rocket science, right? And I'm saying that because I want you guys to see the importance of that you don't have to feel like you just, oh man, this is, no, your eyes are telling you what's going on, and you see it. Respect it, and just, be principled, discipline, and knowing what you're doing. All right, retracement far less than 1/3 to 2/3 of the previous rally. Of course, this is obviously when it's tightened down up at the top, like we just saw earlier. That way, you're starting to hit exhaustion. All you're doing is hitting the supply zone. It's to get exhausted. The bulls can make a new high at this point, starting to fail. You start to see, the lower high start to print, or you start to see it kind of, pin it value a little bit where it may start to kind of break. And once it breaks, a key point of that support where you see it, where it's starting to, show that frailty. And then, it potentially can come down, right? Then it potentially come down, failed rally, basically, right? But at that point, at the peak, we're not down here because the money already made down here, it just fell at the top. It's exhausted, it's tired, right? That resource is done. Stick a fork in it, right? For the short term, that is, right? And that's that. All right. So again, just a quick little principal value in there, putting a little diagram to play here. Again, you can see this stuff. We went over it naturally, and now I'm just showing you I guess a technical way to look at it from diagrams and the language that it had in play. All right. So again, that's a quick little synopsis there. I do have a little. We got like thousands of books. So if you ever need books on this stuff, let us know. We got you all PDF form. We got audibles too. We loaded. We got everything you need, right? In the book about investing, trading, multi-level marketing, business, finance, strategy, quants. We got all those books readily available. Let us know. We get it to you. Simple as that, right? So again, technical analysis, going back to the basics. So really quick on the back end, before I get to log off here, shut it down. I'm gonna take a water break. I'm saying a whole lot, right? Give me some H2O in my system. All right. The last part is very balanced and based in terms of what we're talking about. All right. Hold up. Is my thing off? Where am I thinking? Okay, here we go. It's basically tomorrow, right? We got some important data coming out in the CPI data. We already know we up against, a Fed that's, getting ready to taper, right? Right. Getting ready to potential aggressively taper the markets, right? Whether he do it or not, that's still to be seen, right? So we want to be cognizant of that, and that's why the markets are moving somewhat erratic in a way where it's not so defined. Now, let me go over to my chart today. This is what I charted earlier today, before a lot of these moves even happen. I wish I need to get in the habit of doing so, because I want people like, man, you just did that. Like, but y'all know me. Y'all know how I am anyway. I'll be doing this stuff, well in advance a lot of time when I'm playing because I'm out here trading the market like everybody else. But this is how I charted the market today, and it respected it. Oddly so, it respected it. Not oddly, but that's just natural. But you got to say that because the market is so nutty, it'll go against your grain sometimes. This is how I plotted it early in the morning because I'm going off the previous day. That's why you look to the past to establish a potential future, that was already established in that perspective, right? Y'all see we had put these up here, I think last week during training, the lower highs, right? You just can't see them because I have them on the daily chart as opposed to the hourly chart, and it's not so defined. But that's what those, the little yellow things, they're signaling what basically lower highs, right? Downtrend. And then you had a hard pivot, obviously, right? Some of the stuff we just sat there and looked at in that chart diagram we just looked at after making a succession of what? Higher lows to establish a new high. You breaking down to a 1/3 or 2/3 of the move, right? In this case, clearly that's around about 1/3 of this entire move off this pivot point here. I don't make the rules up. I'm just showing what this stuff looks like. I plotted this stuff out in terms of how I was going to play this market today, and I bought a lot of puts aggressively, right? Off this top pivot point. Swung one, I swung two, and then I played some in the intraday, right? Clearly here, we had a small short-term pin or a rising wedge, right? Clearly. And now you broke down inside of that and you coming back down. Now you didn't break any key massive points of support on the way down, but you hit some, right? And tested them covers. These guys here, this middle gun line here. You got a body candle there. You got a little small little body down here. Right? These are little points you can plot on the way back down, right? On short term. But then you say to yourself, look at the typical next moving average that you look at. This on the daily chart, of course. That's down here towards what? 461, right? 460, 461. And of course, that's 5 or 6 points to the downside. But yeah, markets can get slippery very quick, especially with this kind of news coming up. And that's where a lot of people probably got contracts laid at. They got contracts probably laid at around where the market ended at today, around about 466, where they bought a lot of those probably, at the end of the day, right? And then they probably gonna have a lot of them that was already bought, maybe, probably, open interest that was already set in place from yesterday, back down towards that point of that moving average, right? That 460, 461 area there, because clearly you can see right here below that 462 here, you got a little line down here, which is a base case point of immediate candles down here at 458. And then of course you got, previous areas, back down over here to the far left, where you got little candles there that show you like a little pivot point there, 460. This guy right here at 461, this candle here. Again, and we're playing off the same thesis we just talked about, half and whole dollar marks. So that's why that 460, 461 looks to be more, relevant, even 462, that people are going to play back into because they're using the moving averages and they're using what these previous candles, wicks, all that stuff, right? So that's why, it's not hard to see that. So 462, 461, and 460 probably got bought up a lot, right? And we can go look at that on the bar chart and see. Let's say on GP, let's run up here really quick. On GP, right? Let's see what that option flow looked like for those contracts going into tomorrow's expiration date and how that plays into the idea of what we're talking about for the Fed tapering. Why? Because these are places where the market tried to establish a new high to break and make a new all-time high, and it failed. So far, it has failed. And it's starting to kind of roll over into the potential bad news. So this is more of a fundamental play and a technical all-in-one, right? And now the onus is on the bulls to prove to the bears that they bought their life. If not, bears got supremacy because we got the top yesterday, right? Meaning I got short. So obviously I'm more of a bearish thesis at that point, right? So let's go to those puts, right? We just talked about 462, 460, and 461. Let's see if they're pretty heavy at those areas. All right, let's see what they look like. And low and surprise, right? Ain't no surprise, but we already know this because we smart, right? Bruh, y'all already see it, right? Y'all already see it. You already see it. What do you see? 460 strike puts. Look at the open interest. Look at the intraday volume. 61,000, basically 62,000 contracts were bought for a 460 strike put today. Those things gained at least a minimum of 10 cents today. Minimum. Right? Open interest, 27,000 contracts. See how that worked? $half, whole dollar marks. 461s, 20,000. The 462s, basically 30,000. That's those three areas of interest there we talked about. 50 cents, 45 cents, 30 cents for those contracts. Right? Of course, you got 464s and heavy, and then 465 and 466. These are ones, what do you call it? You know, buying in the money at that point when the market starts pulling back. Of course, they're going to be heavy, right? But that's people playing out for a bigger move back down towards that moving average. That's rules of engagement. They all made money today, all of them, on the way back down. They made money. Of course, if you bought them strategically at the right, pivot point, right? They made money. Of course, I showed you with the one I got. Again, 30 bucks turned into what's to dang near what, near 100. Playing the top, taking them, off that double top, triple top, whatever you want to call it, playing it back down. The market broke, fell, 467 came all the way down to 466. All right, that's how you can back test also price action based upon where people putting their money where their mouth's at. Option flow charts give you a direct view of where people are parking their money at, because these are what they call static price points. Why? Because the money is already collected. It's not like a limit order you could do inside of a day trade where you can put it on and take it off, right? And try to, spoof the bid and all that kind of, make the market make it chase you. Here, once you buy a contract, unless you sell it right away, that money already categorized and accounted for. So this is a static readout in that perspective. It's not changing unless somebody don't say it right away, but it's static. So it's a good way to kind of see where the money's at in terms of, the day, trading aspect, supremacies, bullish, bearish, whatever. Right. So yeah, people loading up for a particular inevitable pullback, possibly, based upon that CPI data tomorrow. It's supposed to come in harder than expected. That's all based upon, again, that what we've been already reading off of, inflationary readouts in terms of price of goods and services are up, right? Rice, cheese, chicken, bacon, beer, whatever, right? Corn. The prices of those things are higher because of the supply chain shortage, but more so it's the Feds that's really causing it. They're exacerbating that of the producer side of the house, right? There is a level of, they're trying to play the whole kind of push scenario, right? And it's not really that fight for them to fight. It's a supply issue based upon you don't have enough labor force to kind of balance out that of, the price of goods the idea that there needs to be enough surplus to meet that demand of people wanting to buy it. If there's a shortage, it's very simple. Prices go up. If there's a surplus, prices come down. Right now, prices are up because there's a shortage of production of that item, crop, cotton, whatever, steel, whatever. So, and it's exacerbated by the Feds because they're printing more money, which obviously dilutes the value of the dollar even more, which also causes inflation to get out of hand. So now we're kind of close to entering to the world of stagflation because you have basically low wages, not enough wage value to kind of, equate that of the rising cost of the goods and services, right? That could be very detrimental to your market if you have stagflation.
That's what the Texas senator said. You are printing too much money. Chapter 9, Milton Friedman.
Too much money, right? The stuff we were talking about last year. Like, man, these juggers here going, but they get addicted to this stuff. It's a power move. They're going to get greedy and they're going to keep printing. And they did. They just kept printing. And they still, were still trying to print more and more when the data was saying, hey, back off the printer, bro. But see, that's what money, printing, fiat currency do to you. It's fake money, printed out of thin air. And because they have such a power to do that, it gets wicked, right? I could spend hours talking about that, but I won't because we trying to be directed tonight. But again, talk about inflation, the importance of that, and how the Feds are to blame for this, even though they tried to blame it on supply chain issues, which that was not the case. We know that was a lie out the gate. You can't blame these people. They have a shortage of air, basically dealing with the fact that the currency values are out of whack because, again, dilution of the dollar that y'all doing from buying the bonds, that's messing up everybody's ability to get their goods and services also move because they having to, deal with the fluctuation of currencies. And then again, it's not enough people producing them at this point because we're still dealing with that little aspect of the COVID stuff to meet the demand as well. So they're getting hit twice by the value of the Feds or central bankers diluting the value of the currency. And there's a shortage of workers to kind of really meet the need to get these goods out, right? That's a double whammy. Double whammy. Right. So again, in terms of that, again, we know again, this is why the onus is on at this point on the feds to fix that what they've already broken. Now, some people will say they were doing it maliciously. Obviously, I would say they were doing it very recklessly. They were, because again, in this case, they could be wrong, but they were right, meaning they was able to still, in their opinion, pump all this money to the market, which obviously helped a lot of people who own assets and wealthy people. Once that money goes out range, you can't rescind it back. They can look wrong in terms of eyes of Congress. Now, yeah, we overshoot it. We just thought we were doing the right thing to protect the economy. But at that point, all they did is what? Pad their pockets and got themselves richer, which they did, because they were doing a lot of insider trading. Couldn't make this stuff up. You set the monetary policy and you trade into it. Once the money is made, it's made. Unless the SEC go after them, it's a done deal. Does that work? Ain't no change my mind in this one. The damage is done. So this is the level of Wall Street where I tell people, these people are greedy, money-hungry mongrels, right? And they can care less about Main Street or all that, what people be sitting there marching about, talking about. If it ain't dealing with money, people don't care. They live in a bubble in their own world. So it's about how time we start realizing that you got to play ball the same way too. That's how the money is made. They're using future taxpayers' money to finance their what? They lavish, guesstimations and opportunities just based upon we got free will to do what we want. People rarely make excuses when they're making money. Rarely. So this is as important. So it's good to note that. So that excerpt again, I was going to play that again too over Chris. So good that you kind of rehashed that, because this is all going into the CPI data. And next week is a very big important meeting by the Fed, right? They have an FOMC, right? Federal Open Market Committee meeting. Excuse me, next week, where they already was talking about, they're gonna have to lay out a guideline or a plan to the American people, what they plan to do to fight inflation. That's the only thing they got to be focusing on now. They can't play this game with Wall Street any longer. They know they're in the hot seat. They're in trouble by the American people, because inflation kicking people in the teeth, and people are calling their congressmen and House of Representative people up and saying, hey, what's the problem with this inflation? And they're going to take that stuff to what? The next chain of command with the Treasury Department. Janet Yellen, then Janet Yellen going to say, okay, yeah, we trying to, accommodate people for monetary policies by, quantitative easing and buying bonds. So it obviously goes back to the Feds. Not rocket science. Not rocket science. So this is why, of course, you are going to have a succession of higher CPI data readouts until there is a big change. It had to be something that's a notable change that cause it not to. And the only reason you're going to be able to do that is you're going to have to taper. There's no other way this is going to be transitory without them tapering. That lets you know right then and there is not supply chain issues that's causing this. It's not.
Can you tell us what happened? What's going to happen when the Fed start tapering?
So case in point. So what happens is, of course, when you have what they call a reduction of bond buying, which that's basically doing, they buy an aggressive bond. Bonds will do the value of what? Right? When you buy a lot of the bonds, it's to do a lot of, it subverts the idea of what you have in terms of, let's say if you got an economy that's kind of meandering around, it's not really producing a level of GDP that it typically would make. In this case, a pandemic happened, right? And you start backstopping the debt of your society. Basically, that's what's happening. We subsidizing our debt, which is actually unconstitutional. I was talking about this like a million times. It's unconstitutional for the bonds to monetize the debt, because that's not allowing the free market to work. That's why they call it sink or swim. Either you got to have a good fiduciary responsible value institution ahead of you, or you cannot just print money to backstop your bad decision making. Why? That's a recipe for disaster, right? Because you're going to price the middleman or the small people out the market, because the backbone of your economy is always going to be your Main Street worker. America has gotten away from that principle. Why? Because it's gotten greedy, because it has got away from some of the most basic core principles that it should have been, obviously, forecasting into anyway. But that shows you the power of greed. When wrong people in power, that's how politics get corrupted. And you have this imbalance in terms of those who have and those who have not. The wealth gap widens. And the only way you can fix that, right? The only way you can fix that is you have to go down to the bottom and really Do hard work to rise the people from the bottom back up. You can't do this rising tide lift all boats lie anymore. That's a narrative that you should never vote for. If anytime you hear politicians saying that, please put a pellet gun, get a pellet gun, because you don't want to kill him. Get a pellet gun and hit him in the neck or hurt, because that is no such thing as a rising tide lift all boats. They've tried that experiment several times and it has failed. They tried it on the Reaganomics. At one time, it kind of worked a little bit, was on the Clinton. That's because they balanced the books in a way where they started putting a lot of social programs into play. Now, they had some bad stuff too with the 3 strike law, but a lot of the social programs really helped the economy balance itself out at that point. Now they figured out that, guess what? The more they keep bringing these Wall Street bankers to Washington to play these political seats like they do in terms of these Goldman Sachs ex-executives and this, that, third, to be the Secretary of the Treasury and the Federal Reserve Chair, you're going to continuously have a greed wealth gap, basically a catastrophic value where they're going to keep stealing from the future taxpayers' money and enrich the pockets of they, now current situation and pay that bill forward. And saying we're doing things to kind of help the economy. That's why we need tax cuts for the wealth in this moment so they can turn around and make more. No, put the money in my hands. Let me make that decision. Of course, that's why they fight hard against the ideal of socialism. They want to turn you away from that idea of that. Why? Because they dare not want you to think that they should be doing something to really help you get off your what? Off your back for a change.
Yeah, because they basically saying, like, why would we give you the money? You ain't gonna do nothing. You're not gonna do nothing with it anyway.
That's the excuse they make.
Give it back to us. Yep.
That's the part about it. Like, this should grind your gears, because they literally saying that you're irresponsible with finance to the degree where they got to take your money and spend it on themselves so you can see them, reach a level of wealth and richness and, I guess, stability, and say, yeah, you should aspire to be just like that person. With your money they're doing it with, though. Your tax dollars they're doing it with, though. So the markets are obviously trying to price in the ideal of what it potentially could be in a very, very organic, going back to an organic marketplace again, where these companies have to stand on their own again, meaning organic production, organic earnings, not all this diluted cheap money that the feds are pumping to the market that has enriched these assets to run their price up higher and higher. Apple, Tesla, all those tech stocks, etc. And now these companies have to stand on their own. That's a recipe for disaster, because everybody got comfortable in the markets. They got comfortable depending on all this free money that the Fed was just pumping into it, while Main Street was like, dude, how am I feed my kids? I thought the Fed was supposed to be, for equal employment and helping price stability and, maximum, opportunity for every person in the country. No, Fed job is to what? Protect people who own what? Assets. Simple as that. I hate to be the bad news for y'all, but if y'all been looking at it, anything outside of that, you've been looking at it wrong. These people do not care about you at one iota. Dr. Claude Anderson already told y'all this stuff. Y'all, a lot of people act like they don't want to hear him. They want to trust the government, right? I mean, we had that conversation a while back. Oh, I believe in the government. I'll leave that alone. I don't want to go there. I'm not going to rehash that. Anyway, moving on. Right? Moving on.
Yes, ma'am.
Right? So that's why this stuff is important, guys. You realize that this is all based upon the Feds now being backed into the corner. Jerome Powell can no longer play the role of a what? Of a dove. He has to make more of a hawkish move. And for the fact that he overshooted his target by being greedy and keeping his foot on the gas pedal and ran out of oil, transmission fluid, and gas. He locked the engine up, blew the transmission out, and ran out of gas. He has to make what? A hard pivot now, like we just talked about on the charts, a hard pivot point to fix that what he just broke. So what is that going to do to the stock market? All right, somebody might.
7057.
Okay, I muted my guy. What is that going to do to the stock market? It's going to cause the stock market to have a small value or maybe medium to large moment of what? Panic, right? Because it no longer can just try to price in the idea of all this Fed money coming in, $120 billion every month, right? Mortgage-backed securities and treasuries. Those T-bills finna be going bye-bye. They're going to start dumping bonds, and that's going to cause yields to rise, right? The 10-year yield, we talked about that plenty of time. 10-year yield going to start increasing. And the 10 years start going back up. That's a what a massive problem for tech companies. The overbought, frothy tech companies, they're gonna be the first ones. The algo is gonna search out to take them out. Now, this is all speculative, but it's all calculative based upon the numbers. I'm not just making this up off the top of my head. It's all based upon the value of how that's going to play out. So, case in point, really quick. Let me do this real quick because I'm about done here. I want to be done by 9, right? Right. If we come over here to the futures market, just on GP, just showing this really quick. Where we at? Let me clear this off the screen. So I always tell people keep your eye on the 10-year yield for a reason, right? Because again, we can watch commodity markets too. That says a lot, because we get it, gold and all that, right? Oil, obviously, oil, in a strange place because they started trying to establish a new support that could potentially run higher based upon all this inflationary talk and all this stuff about potential COVID being on and COVID being risk off and risk on because of Omicron. But they now have a reason to say that the virus can be contained with 3 shots from Pfizer, whatever. They're trying to play down the severity of anything because to them, if they can dumb it down, and it might not be that bad too. I'm just saying that if they can dumb all this stuff down, play it down, that gives the market more fuel to potential to try to go higher. These people got goals in mind they're trying to hit before the end of the year. Before tax loss harvesting kicks, they're trying to squeeze every dollar they can out this market if they can. They don't care about nothing else. Again, that shows right now people operate under the mindset of a robot. As an investor trader, you have to take that same approach. Why? Because your emotions cannot compromise you. If you want to do what they call emotional value investing, that's why you want to invest in stuff like ESG, environmental social governance stocks, LGBTQ, all that stuff, clean air initiative, clean. That's what that stuff for. But in the broader market, these people ain't playing with no emotion. So you got to realize that, right? All right, you need to realize that. So the 10-year yield, of course, is definitely a barometer. And now you need to start watching for the 2-year because the 2-year is starting to get close to being what? Inverted, right? Right? Yield starting to invert, right? High end debt, low end debt started to be a big problem. Why? Because they overshoot a lot of their targets. They've been pumping too much money. And then the markets haven't had a chance to balance out all the potential and value that employment is starting to kind of get a little bit better. And the markets are trying to read out all the free money as being a problem for it. It's trying to work itself out of that in an organic state. And the Feds keep beating it back down inside inside of a box. That's a problem. Because eventually when it really breaks out really aggressively, it's going to really get the moving higher. Meaning yields going to start to rise, bonds going to get dumped, and that's going to cause a massive potential recession, right? Especially when you start having yield inversion. That's what causes recessions, right? Low GDP growth, high yields, right? Low productivity, even though a lot of those things obviously kind of, again, in this case is spurred by the Fed, but nonetheless, that's why you want to keep your eye based on the 10-year yield. If it gets anywhere back above 1.6, right now we're seeing 1.5 as a good place to support if we can climb back into that. But definitely when it gets back into the 1.6 area, oh yeah, you definitely want to keep your eye on that 10-year yield, right? Anywhere at basically 1.6 or higher, that means tech stocks probably gonna be, they're gonna be popping and pinging, right? They're gonna be like right there, right? But they're gonna be trying to find a way back down to the downside a little bit because now the cheap money is starting to dry up, and now they're gonna have to pay their weight worth in the value, in terms of their high PEs and ability to borrow cheap money to kind of float their stock because they don't have natural production, organic production, and they're using buybacks, stuff like that. They can't do buybacks with cheap money, all that stuff. It's going to bring the valuation back down to what they call a more livable wage. It's going to try to, at least, right? It's going to try to, right? So that's why it's important. So the taper going to the end of the year, all right? We already know they've started the tapering since last month, right? Right now they're supposed to be doing what? $15 billion a month. They're going to have to aggressively increase that now because the CPI data is still showing that we're going to have higher readouts. So we might have a double up this month in December. That might be the news they're going to come out and say next week, right? They might have to speed up the taper and double it up a little bit. That's what Jerome Powell was already signaling that in some of his sound bites, that they might have to double up to hurry up and cut this tapering down even more. If they double up, that means you're going to go from the $15 billion to $30 billion a month as opposed to $15 billion plan. And that's going to obviously niche that $120 billion down a lot faster, right? We already cut down at $15 billion as of now. So $15 billion, that means 105. So $30 billion from 105 is what? Right? That puts you right around about 85, right? So now you back down, you always down to 85. Yeah, it was 75, 75, yeah. 75 billion, 75 billion now at at or around December or January, when technically it would have been around about what, 90 to around about 105, somewhere around there, give or take. So that's less, what they call risk appetite in the markets with the Fed tapering. That removes a lot of the Band-Aid off the what? It's removing the Band-Aid off the market, which is a big problem because the market is hemorrhaging what they call Main Street money, playing into these greedy, Wall Street people, the bankers, whatever. And now they're gonna have to account for that money, right? They're gonna have to account for it, right? Because it's being rescinded, right? It's being rescinded, right? Back to receiver, right? They no longer can make their trading thesis around all this extra liquidity. That's the point I'm getting at. So people are gonna be more cautious in their decision making because they can't just say, okay, everything is green because buy the dip, stunks only go up. That's a lie, right? Change my mind, right? Buy the dip, change my mind, right? The money's starting to move out of the market now like that, right? At least the Fed's backstopping it like that. So yeah, as of now, we got a high, all-time high at 470, 473, whatever. And we kind of failed miserably here just recently trying to make a new high. That don't necessarily mean it still can't try to rally for it, but guess what? The dominoes are not starting to fall. There's more pressure on bulls because the Feds are not going to talk this dovish talk about, but what? Being accommodative, right? Inflation is only transitory. They're not going to be able to talk that talk any longer. They cannot talk it any longer because their problems of overprinting money and stimulating the economy has caused the inflation to get out of control. And so the only way you're going to fix that is put that genie back into the bottom, which obviously going to put pressure on assets that have been richly priced and enriched in their price and valuations. And so they're going to have to start taking some haircuts. Not rocket science. So that's why that CPI data tomorrow is going to be a very big, important number. That's why markets start pulling back at the end of the day today. If they felt so confident that was not a big deal, the market would have rocketed on when it took back over yesterday's previous high point, or at least closing point, excuse me. And then at least try to lunch from there going into that tomorrow data because they felt like, oh, Jerome Powell got that back. He's going to speak a very dovish tone. He still may try to, but it ain't going to be really save him. Why? Because he already been put under the what? Under notice that, bro, you the problem. You've been lying for a lot of people for a long time. You've been getting away with it. Yeah, we got rich too as senators and politicians, but guess what? Now we got to help, the American people. Why? Because primary is coming up, election coming up. We don't want these people to not vote for us. They already know we robbed them too, but now I got to act like I'm listening to them. I'm not making this up. That's how this stuff works. These people that can care less, right? They can care less. All right. So that's why this is important to realize that. So you want to keep your eye on that 10-year yield. Again, anything above 1.5, get excited. Anything 1.6 is about to be fireworks. That's where you got to start looking at tech stocks, the QQQs, the NASDAQ, right? NDX, US basic tech 100. This right here is going to start getting weaker and weaker. Because literally what's been fueling the market is basically been what? Tech. Tech been the only thing keeping the market propped up. They buying heavy, aggressive Apple calls, right? Amazon when necessary. Microsoft, definitely. Microsoft really carried the market behind the scenes. People don't even want to get into credit. Google, stuff like that, right? It's easier from the pump the market just by buying Apple and Microsoft calls alone. Put the market on cruise control and just cruise up to the upside. Crazy how they have that level of power manipulation, but that's the markets, right? And they make up the majority bulk of what the tech stocks will look like. And then Tesla add a little bit, Google add a little bit, et cetera, et cetera. But all those assets now are have to meet their maker, meaning they have to start producing organic growth. They can't depend on the Fed, fatten up their balance sheets. They can take that money, taxpayer money, basically do buybacks with their stocks to keep the prices up, to kind of keep this musical chairs game going. They're gonna have to stand on their own 2 feet. And Apple already signaling they have a massive problem with what supply chain issues. And on and on and on and on and on, right? Couldn't make this stuff up. Prepare now. Start preparing. Don't mean the market's gonna crash. Don't necessarily mean the market's gonna rock up new high. That means you have to start being more vigilant in terms of how you start pricing in opportunity. Why? Because it's not gonna be a free-for-all marketplace when the Fed start pulling back the punch bowl where everybody drunk on cheap money. You got to start being more of a real what? Trader all of a sudden. A technician. A lot of people ain't built for that. Why? Because they're just too busy saying buy the dip on everything. Very recklessly immature, right? While the game is on, of course, play ball, make money too. But realize at some point, all that stuff is going to come to a head at some point. Like markets typically try, to try to price themselves into doing the right thing at some point. The 10-year yield and the bonds try to do that. The Fed just kind of keep artificially subduing them. That way it keeps this game over here, rallying on a whole lot of nothing, right? So these are your organic indicators, 10-year yields, the dollar, the DXY, right? Those are organic indicators. Organic. Assets can be easily bubbled up and inflated. These are what you call inorganic, right? Even though they're real company, real stock, but they're inorganic in this environment. Why? Because they've overly leveraged themselves in these high risk appetite assets because there are no other alternatives out there that people can invest in a pandemic environment. That's why everybody ran to stocks. And they saw their returns go through the moon last year into this year. And we all benefited, of course, whatever, we in the game, we play ball, but a lot of people on Main Street have no clue. And they just, basically, their tax dollars went to this and not programs to help them. Don't even get me talking about EID alone and all that stuff, whatever. They made it hard people even to get the moratoriums for rents and all that. Man, these people, look, all right. Moving on, right? So I got to get off here. All right. So that's why you want to watch that. So that's the economic data for tomorrow. Again, it's the CPI data. If you want to track that yourself, it's not hard. Investing.com is one of the portals we use a lot. Come over here, of course. You got all the little different tabs up here. You kind of go through this. You want to find the one that says economic calendar, right? Anytime you find one that has what they call economic calendar, go to tools. That's going to give you the readout of any kind of particular incoming data that may be, again, worthy to note if you are obviously trading the market for any odd reason. These are what they call macro data points that are worth perusing, right? To know about. So tomorrow, of course, you got, stuff coming out, in England, Great Britain, Europe, right? They got their data work because we all part of the central bank union, right? That's what keeps the markets up because it's a whole conglomerate effort by, all the nation's central bankers, right? It's a farce. I get it. But it all ties into how markets move, right? Even in China, right? So there we go. 8:30 in the morning, core CPI, year over year for November, right? These are the points for that point, right? These are the forecasts. These are the previous ones. So this is the estimate, and those are the previous ones, right? So they're estimating on the core, right, around about 4.9. The month over month, they're saying about a 0.7 increase, and on the year is registering around about 6.8. So anything at 6.8 or higher will be very problematic. Very problematic. Now, previously we registered what 6.26, or 6.2, excuse me. And now you already got a bump up of 0.6. 0.6 is a lot in terms of core, like basically what? Inflation. That's a lot in terms of inflation. Once you understand the value of that, that's almost a full basis point, close enough in terms of CPI data, how it typically reads when it's, on the natural state as opposed to what we're dealing with now. So that's problematic. Some people saying we might even hit a 7. Now that's really reaching, but it possibly can happen. If we get a 7 readout, that's really going to force the hand of the Feds even more so. People in Congress and that's really riding his back going to be like, see, we told you. And guess what? You caused this. Stop lying on supply chain issues. You caused this. Because you just printing, no pausing. And you just kept this old wicked, lie about transitory when it was not transitory. These were real issues. And then you try to placate the American people to get them to ride for you. Only for the fact that you feel like we kept the stock market high and people excited, they're not going to complain when they're making money. But guess what? Only the wealthy people and people that invest in markets were not going to be the ones benefiting, not Main Street. Well, now Main Street is complaining to the local politicians. They got to do something now because they want to get reelected. So they got to pin the tail on the donkey. Guess who the donkey now? Jerome Powell. And it can potentially hurt Joe Biden's presidency because it's under his watch. Even though, Jerome got elected under Trump, that don't matter. You kept him on, you reelected him. Guess what? Now he's your problem to deal with. Deal with it. So that's why this stuff is important. So This is how you keep up with economic data and read out some of these, macro points are very important. CPI is very important in an inflationary environment, and the PPI as well, price producer index, all those important, right? So yeah, you might want to be, tracking this stuff when you can. And some days, especially if you trade in the market. So at least you know what's going on as far as any kind of fundamental data point. So yeah, that's why the market's going to be a little timid tonight and whatever. Yeah, because they up against, some serious data that they can't keep evading and skating up underneath. They can't. They cannot. So guess what? This inflation typically helps commodities because it causes them to go up. But if the Fed start tapering, it's going to hit a lot of these stocks. It's going to hit crypto too, because crypto been benefiting off this extra stimulus money, right? Until it can balance out and start standing on its own and diverge away from equity markets. That's why crypto been kind of being very weak lately, because they're trying to price in the fact that some tapering is about to happen, right? The extra stimulus that's coming through the pipeline, people borrowing cheap money on leverage through credit card and buying the stock market and the crypto market through that. When credit card rates go up, guess what? People start borrowing less. That means you can't buy crypto with. That's tapering. Is it making sense, guys? Is the dots being connected now? So that's why a lot of this stuff is under pressure early. It's trying to people front run. They start selling early. Some people already start selling at the highs because they already kind of a forecast. Don't necessarily mean it's going to pull back. I got to keep saying that. But it's starting to show signs of weakness. That's how you assess the weakness, by seeing what levels that the markets are kind of starting to show, skittish nature at, or weakness at, or it's pivoting more to the downside at. Change my mind. That meme, right? That meme again, right? I was extra bullet, changed my mind. Now I need to be more cautious. All right. So, the end of the year looks like more of why they was banking on the Christmas rally, because Christmas rally, they always trying to play for the Christmas rally. We get that, right? Whatever. Now it's more so, this is going to be, again, this is one of those inorganic moments where they can't just juice the market like they typically, because we're dealing with real world problems that's really starting to kick everybody in the teeth, inflation, all that. So they can't play that game like they used to. Now they got to deal with reality that the feds are not accommodative. You won't get at least that aspect to help your little Christmas pump. Not that it can't still happen, but they got a mountain hill to climb for that to happen. And people already feel like they're kind of selling at the top at 470s. They're like, okay, yeah, we might not get 500. Maybe we might get a push. But as of now, it's more risk off energy than it is risk on. And that's odd to say that of late, because everybody just been like buy the dip on everything. But I'll be the first to tell you, it's more risk off energy than it is risk on, because they can't get around that CPI data. Now, they better hope, right, that number come in lower. If it come in lower, then guess what? You're going to get a rally. You're going to get that Christmas rally. I'll be the first to tell you. If that thing come in lower, like I said, come in like 6.5 or something like that, 6.3, right, that'll be really crazy. You get a 6.3 readout. Now, the Fed's still going to have to taper because it's still high. Don't get it twisted. But the market look for any reason to lie, to make excuses, say this is a rally moment. If it comes in at that point, all I'm going to say is don't be trying to fight the market and be like, man, this is still bad now because I was planning for puts on. You better get you some calls on standby and buy you some calls if you're arbitrator, or get ready to get long on some of these assets, because they're going to use that to rally off of it. Even knowing that the Fed's still going to taper, right? They're going to start to take one with the other Feds back into the corner. They can't win. The Feds can't win. Right? Now people just trying to play the game of supremacy, like what side they're going to choose going into the end of the year, right? If they're going to do tax loss harvest and then accept the losses, if they're going to cash out to kind of, deal with the taxes now, and some of these stock meaning get the last little bit that they can squeeze out of them, or they're going to fall back and just let things play out, right? That's what's already in the books right now. These people are already planning for this. They already planning, right? Don't y'all be caught off guard, right? Right? Do not be caught off guard too. So if you're in stocks that got very high PEs and forward PEs, and they already kind of showing resistance, they showing weakness, especially in the tech sector. And the idea that you may can get an extra little bump into the end of the year, but you best believe a lot of that stuff gonna start kind of subdue a little bit, especially the first quarter of next year, or fourth quarter at this point. because we're playing into it now, but definitely first quarter, but definitely fourth quarter, then yeah, be cautious. Don't be meaning going all in at the top saying I'm finna buy Apple at 174, basically with a boatload of money. You nibble in on substantial pullbacks, no all in on peaks, right? That's just being responsible. That's not investment advice. That's just, of course, entertainment, observation. All right. So make sure y'all keep that in mind. Make sure y'all stay, hungry, humble, right? And somebody asked about, yeah, so chip makers, they're in the same breath because they fall within that tech sector. So the one thing that, even dealing with the semiconductors, real quick, America's back into the corner even with that. They're banking everything on Taiwan, right? They got ran out of China, obviously, because of the whole China Cold War. They put all these chips in Taiwan being the backup, right? Because Taiwan was already producing some of the most chips on the planet because Taiwan Semiconductor, y'all know that company, right? TSM is their ticker symbol. They produce the most chips on the planet, basically. But they under fire because they have to deal with what? China looking to go to war with these jokers, right? So they hold manufacturing disrupted. So that's forcing American people now, American companies, to try to figure out how they can manufacture chips in America. That's all this stuff is doing on that end. That's a good thing for a change. Bring jobs back to America, right? So there's some companies out there already starting to figure out how can they produce their own chips. Of course, Tesla making their own in-house, but they learn how to manufacture it on a mass scale. Apple making their own chips now for the new M1 chip, but they need to figure out how to make it on a mass scale, avoid having to deal with conflict in the Middle East or in China or Far East. They got to start bringing production back over here. So their companies are already putting together an idea how they're going to try to do that. Not making this up. But until then, some of those chip makers might be under pressure because they still got to deal with inflation, supply chain shortage. They can't get the product moved from the containers to the end user. It's all superlative to that perspective. We understand that. So yeah, they are up against, that same issue too. And some of those companies got high PEs. They might get attacked by the algos if the market start pulling back because of Fed tapering. It all can happen. If was a fifth, I get it. That's just how you got to plan for it though. Right? So be cautious, guys. Be cautious. Again, understand, hey, all this stuff, these are just signals, right? This is stuff that you guys are already kind of planning for. We've been talking about them. These are just, proper signals, right? To start saying, okay, hey, now, is a good time, for me to start, being a little bit more, a little bit more what? Cautious, right? A little bit more, responsible in a lot of ways, right? A little bit more responsible because again, you probably not going to have that kind of just open, just kind of anything goes kind of energy going into, next year on the account that, the Fed is starting to kind of really ramp up. It's neat to want to beat this kind of inflationary bear back into the bottom, because the more people keep complaining about it now going into the primaries, it's going to force, Congress to do something. Right. Again, keep in point, like I said, once the money already been made, it's already made. People ain't gonna be like, oh man, I need, whatever. When the money made, it's already made. They can care less at that point because they can't rescind it. And they will do everything they can to squeeze every bit of juice out this, that orange or whatever, right? Before, they know that, okay, it's done. It is done. It is finished. Now we got to go out there and, act like a real company all of a sudden, right? We got to go be a real company now, right? It's that kind of reality, right? They're going to dust themselves up and pull themselves up by their bootstraps, right? Them greedy, them type of joker, them greedy joker, right? They're going to pull themselves up by their bootstraps, right? When they just been feeding off all this taxpayer money, ran the national debt up, a run on the Fed's balance sheet went through the roof, over in there, $8 trillion plus, close to that, $8 trillion. And then there's no true plan to really pay for all this. That debt gonna get paid and passed forward. And people gonna walk off onto the sunset with pockets of cash, balance sheet swollen and all kind of stuff. And like, okay, what did that really serve? Again, besides enriching people who own assets already. So yeah, we might want to start realizing why this stuff is important, to the tune where we realize how this stuff works so we can participate in it thoroughly. Right. And so on that note, we're going to end out with the reason why you want to be very cautious about, this whole idea of the Fed's next week FOMC meeting, and how Jerome Powell is now turning hawkish as opposed to very dovish, because he has the fire of, Congress on his back. He just got reelected, so he'll have to play the game of trying to be dovish. And this could be very, very interesting for people who own high, high PE stocks and stuff like that, right? So again, be careful, be cautious. All right. So again, taking a playbook out of our brother Chris for bringing out this excerpt again from the Texas senator, right? This guy pretty much, laid out exactly what we've always been saying for a long time, but he had basically the kahunas to really, force Jerome Powell where he couldn't run and squirm away out of this, and evade this kind of question, because he had to talk in this scenario and tell basically the American people that he has to fix this problem that he caused. All right, so we're gonna play the excerpt on the way out the door, and we're gonna end on that. And so again, thank y'all for tuning in. This has been a great build as always, right? We covered what we could under the time parameter. It seems like a lot, but it is made to go back and rewind and play it later for a reason, right? It's to give you, again, more, critical insight. And I know you're gonna pull from me, pull from other people, other traders, other videos out there, but it's all to help you be more responsible in what you're trying to do and being better at this craft. All right. So with that said, we're going to play this excerpt, and we're going to end on that note of, again, the Texas senator raking hot coals across Jerome Powell back. Yeah, right? And him being in a position where he couldn't run, but he had to deal with this, because this will be a big deciding factor come next week, right? Right. And Senator Warren, or Elizabeth Warren, beat him up too, because she on his back right now. She investigating actually the Federal Reserve for insider trading. So keep that in mind too, guys. Stay tuned with that. Right. That's another hot button topic starting to build out. She actually gonna go forward with it, especially since he got reelected, because she didn't want to get reelected. So she gonna form a little committee, and they finna go after the insider traders. Right. So Daly, or the other guy, Rosenbaum, whatever his name was, they finna start going at them guys. Right. So we'll see. Right. But that's the talks around Washington, what everybody's saying now. Right. So that's going to be interesting, what that might do to the markets. All right. So that's it. So let me cue this up here, guys, and I'm going to let this play. Then I'm go check on my little dinner, and we're going to close out. All right. 1 second here. Again, thank y'all for participating. Thank y'all for like, share, subscribing to the video. Again, share this with your young folks too, because again, y'all know we PG rated here. We're trying to change the narrative of financial literacy to get people excited about being investment orientated, especially when it comes to asset ownership, period, right? Because we got to play ball. They're already using your money without your consent, regardless. So you might always figure out how to get some of it back anyway by investing in some of these assets. Simple as that, right? So let's go, right? And we need to make sure we get Chris over 100 subscribers. So again, y'all gonna see his name pop up down here, Chris Woods, right? Go subscribe to the YouTube channel, right? He need to be well over where he at now. He should be well over that, right? So let's help him get to over 100, a minimum 100,000. Excuse me, 100,000. 100,000. I said it right the first time. 100 subscribers, so we can continuously supporting people who put out this work too and helping us, again, with our craft in terms of directing us to a good information. All right. So that's that. So let's run it. Let's run some of this beam footage. I am going to cut my camera, keep the mic open, and we're gonna rock out with this good old senator from Texas. Again, pulling some barbed wire across Jerome Powell back. Well, it was good to hear this little sound bite here. All right, let's get it. All right, we're sharing now. Yep, we are sharing. We're on the right screen. Yep, we are on the right screen. All right. Thank you, Opus Not Ball, for the donation. Thank you for that as well. Thank you for contributing to the channel as always, man. You always come through, show love, or you participate. So we appreciate you 100%. Completely humbled by that. Thank you. Thank you for the donation, family. Thank you. All right. So let's get it. Let's get this information here. All right.
gentleman's time
program
has
was
expired.
Okay, thank you.
Okay, I'm sorry.
The gentleman's time
Program
has
was
expired.
Okay, thank you.
The gentleman from Texas, Mr. Taylor, is now recognized for 5 minutes.
Thank you, Madam Chair. Appreciate the opportunity to be here with you. Chair Powell, I'm sure you're familiar with Milton Friedman's treatise, Free to Choose. Yes. And this is an important, college textbook, I would think, on economics. And I would commend chapter 9 to you, The Cure for Inflation.
Cure for inflation.
I think it is, Mr. Friedman lays out some important premises of what creates inflation. And I'm sure you're familiar with the fact that the into money supply has gone up very dramatically. You're familiar with the Federal Reserve holdings and trillions of dollars of debt, the very dramatic increase on your balance sheet.
Very traumatic. Listen how you talking to him. Very traumatic.
And this comports with, again, going back to chapter 9 of Milton Friedman's book. And he goes in and talks about the inflation that took place in the 1970s. And he has a series of charts showing the supply of money. So here's the United States. And he goes on and shows the supply of money in Germany and Japan and the increase in prices, and then also the United Kingdom and Brazil. And so all of this is going to a very central point that when you increase money, and actually let me quote Mr. Friedman here for a second. When the quantity of money increases more rapidly than the quantity of goods and services available for purchase, we have inflation. You have printed too much money, sir, and that money has created inflation. To stop the inflation, I would recommend to you to stop printing the money. You indicated yesterday that you're going to start to slow down the printing money. I think you should stop it, and stop it right now. Inflation is on the minds of Americans. Poll after poll for the last many months, 70, 80% of Americans, it's a top issue for them. They're concerned about inflation. Inflation is eating away their purchasing power. It is actually robbing them of the increases in wages that we've seen because their purchasing power is down because the inflation is created by the money that is being printed. Would you like to respond to that?
Sure. So price stability is one of our two goals, the other being maximum employment. We have to balance those two goals when they're in tension as they are right now.
You're about to play word gymnastics.
To make sure that this high inflation we're experiencing does not become entrenched. If I may also add, though, the connection between monetary aggregates and either growth or inflation was very strong for a long, long time, which ended about 40 years ago. So the so-called velocity of money became quite variable. And so now we think more of just the imbalance between supply and demand in the real economy rather than monetary aggregates, which isn't to say that that was wrong when written. I think it was probably correct when it was written, but a different economy and a different financial system for some time. Nonetheless, your point on inflation, well taken.
Well, and I appreciate that. And I just, Secretary Yellen, don't you think that the deficit spending that this administration on an unparalleled level, right? I mean, the $2 trillion of deficit spending in February, dumping money into the economy has created the inflation that we see today.
Well, the Build Back Better plan that's under consideration now is paid for.
Okay, but the $2 trillion in February, was that paid for?
The rescue plan was not paid for.
Okay, so that's $2 trillion in deficit spending.
There was a very good reason to pass that. We faced a major risk in terms of seeing our workforce, particularly the most vulnerable members of the American society, scarred permanently, losing homes, being unable to put food on their tables, take care of their children, and being permanently financially harmed, as well as there was a shortage of demand in the economy that could have resulted in long-lasting joblessness and high unemployment. And the plan that was enacted into law was focused on dealing with that. And it's been successful.
Did it create
But
inflation? Did $2 trillion of deficit spending create inflation?
it did boost demand, and that is one of several factors that are involved in inflation. But we, absent the pandemic and the supply chain problems we've had and the negative impact the pandemic has
Secretary
had
Yellen,
on the supply of labor.
what's interesting,
wouldn't be
Secretary Yellen, if I could just to finish here, what's interesting is that Milton Friedman wrote in 1979, no government is going to accept responsibility for producing inflation. And you, ma'am, have just embodied that denial because your spending, your deficit spending is creating the inflation that Americans need relief from now. I yield back.
The gentleman's time has expired.
Daggers.
All right, guys, so that's pretty much the, oh, let me get this mess off. I don't want no doggone copyright. Get that off the screen. You know, warrior trader stuff. All right, so blah, 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 blah. Stop sharing. Okay, that's easy to do that way. All right, guys, so again, you know, very straight to the point, right? That's what you have to now factor into your trading thesis going forward, right? You kind of can surmise from the idea that, of course, let me get my mic stuff back right here real quick. Sorry, I don't have my headphones on, everything. I'm upstairs trying to get my little giblet gravy together for my dinner tonight. No, but, all right, so let me fix this really quick so we can close out. 1 second, family. 1 second. Speaker back to my headset. Line is in. All right, there we go. Sorry about that. That one sounds like I'm screaming. Can't hear myself properly. So again, in closing, that's what we have to deal with going into not just tomorrow's CPI data as a whole, but the energy now that Jerome Powell again is back into a corner, and he no longer can rest his shoulders or rest assure himself on the fact that he's going to have the backing of Wall Street and the politicians alike to say that he needs to continue doing what he's doing in terms of being able to stimulate the economy. The economy does not need his help any longer. He actually overshot his whole reality anyway. But again, they could be wrong and still be right, because again, the money's already made at this point. It's already downrange. They can't rescind that money back, right? So again, it's malicious, but this is how they play ball in Washington. This is how they keep robbing from, working class people. And they say, oops, it was my bad, changed my mind after the fact. It's crazy, right? So yeah, end of year analysis with Fed tapering, they're going to have to start tapering more aggressive. If the data comes in hotter than expected, I mean, if anywhere in there 6.8 or higher, that's going to really force their hand, because why? The numbers that came out today fall to jobless claims that were, they beat on jobless claims numbers. That's more of the reason why there's no need for the Fed to keep doing what they're doing, because the economy supposedly is supposed to be improving by the fact you have more people trying to return back to work. They're filing less claims, to get aid from the government. So therefore, you don't have to stimulate the economy by buying the market. They're not necessarily stimulating the American people. Anyway, they're stimulating the markets, right? That's the lie. They're just backstopping bonds, right? So yeah, that's going to cause the markets to obviously kind of what? Okay, now we have to stand on our own 2 feet. So be cautious of that. Start researching stocks that are what they call inflationary hedges. right? Because those are the stocks that are still kind of being able to be traded in this environment, hedging against inflation, right? Because this inflation is not over just because they start tapering, right? Stocks that are high flying growth stocks, you're going to have hit and miss ones that still try to pump. Others are going to be under pressure for a lot of reasons because the cheap money is going to dry up. So make sure you keep that in mind and look for some of these value plays, right? Oversold value plays because they may start bouncing. And that's also dealing on the fact that if we don't have any more issues with the Omicron, because the Omicron, whatever, that's another big problem that people keep failing to realize, of baking to their trading thesis. You got to still account for it. If people are still nervous about it to a degree, that's another, side that, we may not go back into lockdowns again. So of course, stocks like Zoom and DocuSign and all that, still not going to return to prominence like they was before, right? Peloton, but it's others that actually do have a good use case business model like Cheesecake Factory, right? Just throwing out some names, right? Not investment advice, but those kind of value plays like the airline, because they're not going to be, shut down. They may try to get a little rally bounce, right? They may get a little rally bounce. So consumer staples, some of your consumer discretionary, and definitely commodities, right? Because they still they're feeding off all this inflation still, right? They have to rise, keep their prices up because the cost of goods and services up. So some of those commodity plays are still going to be richly traded as well, especially oil and many others as well. So just keep that in mind. So start researching things that are good hedges against inflation, right? Inflationary trade hedges, they call them inflationary hedges, trades, whatever. And you'll start getting a semblance of idea of what may be good for you to, look into particularly trading, right? So you don't feel like you just left out there, especially if you're new, right? But typically, if you just new, you don't want to be trading with real money like that anyway. You want to be cautious, paper trading, get used to the environment, the market, again, natural observation until you can feel more confident to make, more rash decision with money like that. All right. So that's it, guys. So again, thank y'all for tuning in. It's been a blast as always. I always enjoy these moments because again, it's just another extension of, what we're trying to do here, right? We're trying to raise the bar financially, so we can stay, again, on the right side of the monetary history side, basically monetary history, right? Because they're already using your money with your consent. Without your consent, you may as well figure out how to get some of it back. That's simple. It's a simple understanding, right? It's simple. It's not rocket science within that. So that's why we employ you to get better at learning how to be more, risk on with your own capital, right? It's better you being in control of it than letting somebody else control it, right? The bank's going to trade it, invest with it anyway. You got your money parked in the bank. Why not learn how to do it on your own? Simple as that. And I'll end on that. All right. So any last words from the panel before we get out of here? It's been an awesome moment tonight. I appreciate everybody for coming through on the YouTube side. Of course, the panel, as always, the family here for training. It's awesome. So again, look for it, within the end of the year, we're going to do, individual assessments. Again, like I said earlier, we're going to have one-on-ones, do end of the year review. So everybody that's a part of the mentorship, right, who's under the mentorship, we're going to have one-on-one. So, keep that in mind so we can, figure out around your scheduling so we can make sure we can find, about 30 minutes to an hour to do a one-on-one with everybody, assess where they're at so we can start planning for the next year. All right. So keep that in mind. Right. And I'll make sure I reiterate it again so you guys don't forget. So expect that we're going to have a one-on-one session, 30 minutes to an hour for everybody that's part of it, going into the end of the year. All right. So any last words from the family or the panel before we get out of here? Any last words, anybody?
Always, Oba, thank you.
100 times or send it back. You already know, I'm again, I'm Bantu. That's all I keep saying to the moment. Bantu. I am because we are. We peers in this. We're trying to build this, this thing brick by brick together. That's the only way we're gonna get it built too, is together. Because we're trying to raise again that kind of financial army that's necessary. So thank you, over Brandon. Thank you. Anybody else? Before we close out?
Ashanti over. And just
Karibu,
for
Karibu.
everybody to keep your eyes open. Just pay attention. Pay attention and make smart decisions.
Facts. Right. And again, not asking a whole lot. It really isn't asking a whole lot in that perspective, because again, you're trying to learn something that's going to help, further, build out your house whole, literally. And it's a skill set at the end that you can pay it forward. So yeah, discipline matters. And being functional and wanting to learn something where you can manage your own finances better too. That's commendable, right? So again, these guys get it. That's
Just
why
like
they're
to say
here.
that.
Go ahead, Oba. Sorry.
Yeah, I was gonna say something right along the lines of that. What you do today will be either replicated or duplicated by your future generations. So you got to think about the future as well.
Facts. And that's what it's all about. You know, that's what an investment is. And you're investing into the future, literally, right? Physically through a seed, you know, and also, you know, channeling through some valuable resource, right? Business ownership, land ownership, asset ownership. The only people who get, you know, first preference in this country are people who own what? Assets. If you don't own assets, not that you can't still have a good life, but they're only going to really protect people who own assets. That's not the rules that, you know, we made up. We just making sure we make sure we're protecting ourselves best we can to for the future. All right. So over Chris, 100% right. So make sure you guys take that, you know, and build on that. Build on that. All right. So anybody else want to close out? Yeah, appreciate everybody. Sister Angie came through. Brother Paris came through over Jeremy, Brother David. Since Monica was in here earlier, she's handling business right now, getting ready for the end of the year. So, of course, this stuff is going to be recorded on YouTube, so you can go back and, you know, dig through it and sift through it and, you know, play it back and, you know, pull out things that maybe help you out along your journey as well. All right. So with that being said, guys, I guess I'm going to get on out of here. Enjoyed you all 1,000,000%. Again, keep your eyes on the future market, keep your eyes on that 10-year yield, right? The dollar still trying to break out. It's above 96. It's trying to stay above that and build support. We'll watch that too, because if it continues to ramp higher, that's going to put more pressure on equities as well, besides that of the 10-year yield. And we'll see how this thing turns out. And the VIX just been ripping. So keep your eye on that too, of course, right? It's just a volatility gauge. And we'll see how this market kind of pans out here in the end of the year. All right. So till next time, guys, salute. Again, peace, pound, profit, Shimotep, and we'll see you guys on the next one, everybody. Peace, everybody. Good.